US presidential debates. Plus, Uber scopes out Free Now. The ride-hailing giant considers the purchase of Daimler and BMW's joint venture. Shares in Uber gained 3.3% to the US close. Matt?
All right, take a look at futures this morning. We had slight gains, and now we're down to some pretty decent drops. Eurostoxx 50 futures off 0.4%, as are futures on the Frankfurt DAX index. Now that the live trade is open, you can see FTSE futures down 0.3%. That index will typically open first. Now that the live trade is open, let's pull up the global macro movers screen. You can see a series of risk assets across these columns, and on the far left-hand column, you see equity indices. Official Bloomberg ruling on that would be indexes, but someone still hasn't gotten the memo. In any case, the FTSE is little changed right now, though the DAX opens up 0.4% off. Same is true for the IBEX in Madrid. The CAC 40 also opened down about 0.2%. So European markets opening slightly lower as investors assess the latest efforts to, well, stop the virus, the spike that has concerned so many in Europe, and the latest being Angela Merkel, who has warned that we could see 19,000 new virus cases a day by Christmas. We have now passed 1 million deaths globally. Joining us is Trevor Greedham, Royal London Asset Management, head of multi-asset. Trevor, what do you think about the new concerns? Someone today called what we're seeing in the U.S. possibly even a third wave. But the concern, I guess, is that the deaths could accelerate and we could start to see intensive care units get too many bodies. Is that a concern for you as well as an investor right now?
Yes, I mean, what we've seen over the summer was a very rapid reopening of the world economy as that sort of synchronized shutdown in March, April came to an end. But we've hit a bit of a glass ceiling here. I describe this as like the square root symbol. You get the recovery, then it goes flat because we've still got social distancing. And those increased virus numbers, particularly in the UK and Europe, mean that the economic activity is likely to take another pause. And that is rattling the markets. It's one of several things rattling the markets at the moment.
And yet we managed to see markets make such gains in yesterday's session, Trevor, admittedly recovering some of the earlier losses of September. Do you think that's because, yes, the market is mindful of the infection rates from the virus, but also hoping, fingers crossed, expecting perhaps something to come from the US in terms of fiscal stimulus?
It's a continual tug of war at the moment. The market wants to go up on stimulus, fiscal and monetary, which is really powerful. The market wants to go up because equities are valued on their long-term cash flow streams, and COVID is a short-term problem. So there are lots of reasons why the market wants to go up, but it's also trying to grapple with the US presidential elections, and it's hard to see the market rallying very hard until we know how that's resolved. It's also grappling with the Brexit negotiations, which have the power to impact global risk if there is a big breakdown in relations.
Is that, Trevor, you said, you know, the COVID concerns were one of many. Is that triumvirate of threats you just mentioned, the U.S. presidential election, Brexit, and COVID, really the sum of what you think market headwinds are right now?
Yes, I think so. And I think the time, originally it was a sell-off in the very frothy tech names that started this period of weakness, but it also coincides with what we're seeing in the economic data, which is an inflection point from that very rapid, crazy growth period when the lights were being switched back on to a more sort of steady, difficult growth period. And markets hate those inflection points. I mean, it's not a slowdown. The data's still improving. It's still a recovery generally. But it's enough to make the markets think, well, maybe they were extrapolating the early part of that switch on too much. And you put on top of that the virus numbers, and people thinking, actually, maybe there's a period of softness here. And maybe the virus vaccine will not be as widely available as people think in the early part of next year. So we've got a difficult winter to get through.
And where do you, with all of that in mind then, Trevor, where do you look for exposure at this point? I know that you're not sort of hiding under the bed from equities. You're still willing to take that kind of risk. Whereabouts in the world do you take that equity risk?
So we're moderately, I'd say it's a small overweight in equities. We scaled back about three weeks ago from a larger overweight, but we still take risk at the moment in the US, the technology sector, still doing very well relative to other parts of the world. We're overweight emerging markets, which are being driven by a superior economic recovery in China. And recently we've been adding to Japan as well. And in Asia, generally, the virus is very quiescent. There's not much going on there. And the reason we added to Japan is that we're seeing a trend now of dollar strength. And that tends to benefit the Japanese exporters. And that dollar strength may be reflecting the fact that the virus has got a bigger acceleration in Europe. Over the summer, when it was the second wave you mentioned earlier on, in the US, the dollar was weak, but now it feels that the currency markets are being driven by these relative virus performances as well. We also like high yield bonds. We might get onto that later on, but that to us is more of the muddled through investment, where if you think we'll get through this and there'll be central bank support, that should be a good place to invest.
Let's get to it right now then, Trevor. Where do you think high yield bonds? I know that, for example, in terms of, I believe, equities, you're overweight the U.S., overweight EM, and underweight Europe. Do you look at high yield the same way?
No, we're investing on a global basis, and we're using some high yield funds that Royal London Asset Management manages. We've got a short duration high yield fund, and we've also got a full duration global high yield fund, and we like both of them. The reason we like high yield is it's almost the asset class of choice from central bankers. So in 2008, the banks were too big to fail, and they got bailed out. And of course, the banks then withdrew from lending massively. And as interest rates collapsed, there was huge demand from investors to buy high yield investment products. And so you had a big ballooning in the US corporate bond market. I think we've got a chart. I'm not sure if we're able to show it. But what we've seen here is when this crisis hit, it was the credit markets that were too big to fail. And the Fed immediately, in their first announcements, earmarked $1 trillion to buy corporate bonds with. And they even said they would buy the high-yield exchange-traded fund if the markets became dislocated again. And that's because there was a sudden stop in cash flows. And the danger was that what was a health crisis and an economic crisis could easily have turned into a really nasty financial crisis. So the bailout is focused on the credit markets. That doesn't mean to say, you'll be protected from every bump, and high yield has sold off a little bit recently. But we think if there's a risk asset of choice that central banks will bail out, it's the high yield market.
But will they continue to do so, Trevor? They did it at in the eye of the storm, if you like. But will they continue to go easy on that market and cushion the economy from the failure of business?
Well, I think they will, but as I say, I'm not expecting it to be a smooth ride necessarily. So they've got this money earmarked to buy corporate bonds with. They've bought hardly nothing at the moment, almost nothing, because just saying they're going to do it was enough to bring the spreads back in again. So I don't think, they don't want to fire the bazooka too often. It's my view on that money. I don't think they'll drip it in. So you might have to get another mini panic about the second or third wave and what that means for the economy before the central banks again move in and do something bigger. So we're in dip buying mode on equities at the moment. We think there will be dips to buy when sentiment gets battered. And we think those will also be good times to pick up additional high yield exposure. But for us, high yield is likely to come out the other end because there's been a massive refinancing wave over the summer because of the central bank support. The yields came down and companies have extended their credit a lot.
All right, fascinating stuff, Trevor. Great to get your insight on that. We're going to keep you around. We got more to talk about with Trevor Greedham, Royal London Asset Management, head of multi-asset, stays with us, our guest co-host for the Open. Coming up, House Speaker Nancy Pelosi says the White House will have to agree to much more spending to secure a fresh round of stimulus. Up next, we'll discuss further the Democrats' $2.2 trillion support suggestion. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. 10 minutes into the session, and we're looking at a drop of 0.7% on the DAX, 1/3% on the FTSE. Let's get the Bloomberg Business Flash. These are your top corporate stories from the terminal. For that, we go to Laura Wright in London. Laura?
Matt, Uber is considering buying Daimler and BMW's ride-hailing joint venture. Sources tell Bloomberg the US firm is interested in Free now, but we're told the deal could be complicated by the challenging market, which may make it difficult to agree on a price. A potential tie-up could boost Uber's market share in Europe and Latin America. LVMH is counter-suing Tiffany weeks after pulling out of its $16 billion purchase of the jeweler. The French luxury giant says the decision was driven by the French government's request to delay closing the deal. It's also citing Tiffany's mismanagement during the pandemic. Tiffany sued LVMH earlier this month to force it to go ahead with the deal. Japanese telecoms giant NTT plans to turn its wireless carrier unit, Docomo, into a wholly owned subsidiary. The buyout, if worth around $40 billion, that's more than a 40% premium to Monday's closing price. Given NTT already controls 2/3 of the wireless carrier, any proposal is all but guaranteed to pass. The deal is the largest ever tender offer for a Japanese company. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much. Laura right there in London with the Business Flash. Now, House Democrats have released a scaled-back $2.2 trillion stimulus proposal. The plan is seeking to prompt a last-ditch attempt at negotiations with the White House and break an impasse on fiscal relief that has lasted since early August. But still, both parties are far apart in their ambitions. Trevor Greetham, Royal London Asset Management Head of Multi-Asset, is still with us. Trevor, do you expect any progress here? Do you think the markets expect progress?
Well, I mean, the markets are certainly expecting the political parties to avoid a government shutdown, and that seems pretty likely to be avoided at this stage. We also want to have more stimulus, and that's got really tangled up with the infighting ahead of the election. So one of the other things, obviously, the markets are very sensitive to is any hint that stimulus could be wound back. There was a bit of concern in UK markets about the end of the furlough scheme here, for example, but there's a form of extension that's now been announced. And I would imagine if it comes to it, the markets could actually sharpen the focus a little bit in Washington to get a bit more action there. There's another reason to sort of imagine that we could see some choppiness in stock markets. We've had a good couple of days, but that's the nature of volatility. You get a sell-off that gets overdone, you get a bounce. So the politics really is quite crucial here. And there's even, the bigger issue, I think, is that it does feel as if we could have an election in which the postal votes, the mail-in ballots, become decisive, and Trump has been setting up the scene for saying it's all fraud. So we could have the most sort of contested election we've ever seen. So people are talking about election week or election fortnight rather than election night.
Yes, and maybe longer than week or fortnight. We look at some of the options positioning, Trevor, in markets. So we brace for some uncertainty around that. How do emerging market assets brace for that? I'm just looking at, and this is tangential to our conversation, but I'll bring it in anyway. The Turkish lira, 785.34. Could it get to 8 lira to the dollar? Of course, this has to do with Armenian and Azerbaijani forces continuing to clash for a second day on Monday, that conflict being watched, of course. That's very specific around Turkey. But let me ask you about emerging markets more generally. How do they fare as we head into what you've already described as what could be a fairly uncertain couple of weeks around the election?
Yes, well, I think emerging market shares tend to be quite sensitive to swings in the stock market generally. So if there's a big sell-off, they would probably sell off a bit more. But one of the uncertainties in this particular risk is the currency, because emerging market share markets tend to do a lot better when the dollar is weak. I mean, to really boil it down, emerging markets tend to give you the best returns when China is strong economically and the dollar is weak. And over the summer, we had that combination of a stronger Chinese recovery and a weak dollar. At the moment, the dollar's been stronger, and I mentioned earlier that it was to do with, I think, the pickup in virus news in Europe. But if you were to see a sell-off in America focused on US country risk, I'm not sure we get a strong dollar in that risk-off move. It could be a weak dollar risk-off move. And in that case, the emerging markets would be a bit more insulated. So we are overweighted in emerging markets. We scale it back and we're hedging our bets a little bit by also putting some of that money into Japan, which has the opposite behavior with respect to the dollar. But generally speaking, I think emerging markets look pretty good to us here.
I saw a chart out overnight on the Bloomberg terminal illustrating frontier markets and their relative outperformance to emerging markets and the MSCI World Index over the past few weeks. I wonder, is this kind of thing, is it too far out on the risk spectrum for you, Trevor?
Well, I guess it depends entirely where you draw the frontier. So our emerging market exposure does go down to some fairly small countries, but we're not investing in the real frontier markets. It's a bit too specialist for us.
Yeah, we'll leave that to others then. Trevor, thanks so much. Thanks very much for joining us. Trevor Greetham, Royal London Asset Management Head of Multi-Asset. Really interesting conversation around credit markets, around where high yield goes from here and where the Fed is protecting. Trevor will be continuing his conversation with us on Bloomberg Radio at 9 a.m. at UK time, so Matt and I get another chance to get into that conversation with him then. Coming up here on the programme, British car companies work on a safe harbour for suppliers to cushion the impact of COVID-19 and a potential no-deal Brexit. But how will that work? We'll get into that conversation next. This is Bloomberg. welcome back to the European market open. 21 minutes into a negative trading session. So futures had suggested that we weren't going to go anywhere really at the start of trade, but we've come to the downside. US futures also a little bit weaker, down 2 or 0.3% for the major markets. We had real exuberance in European equity markets yesterday. Perhaps we pay the price just now. British car makers are building a network to protect the industry's supply chain from succumbing to the double threat of COVID-19 and a no-deal Brexit. Companies including JLR and Nissan have joined with lenders to create a so-called safe harbour plan. This would mean that suppliers in financial trouble could ask for improved payment terms from the automakers, with lenders stepping in to fill the gaps. Our European Autos reporter, Sid Phillip, has been writing about this story, and he joins us now on the phone. Sid, how exactly is this process then designed to work, this safe harbour?
Morning, Anna. So the process is a bit of a complicated one. It's a 5-step process, essentially, where the SMMT, which is the auto lobby in the UK, acts as a sort of mediator, and they sort of speak to the suppliers and determine if they can help the automaker, and then if it can, then it goes into safe harbor scheme, and then everyone, including their customers, and that is the car makers, get a say in it, and if they can agree to some terms, then they are looking at sort of bailing out suppliers. And essentially that would work in a 2-part way, where the customers, which are the car makers, would basically give them improved payment terms, while lenders could sort of help them with additional cash or a moratorium on their loans.
Why the struggle here? Is this a COVID issue? Is this a Brexit issue? How bad are parts makers doing right now?
So it's actually a combination of many things, and I think it's more about the uncertainty. So you've had 8 months of 40% declines in auto production in the UK, and as a result, automakers are hurting, and consequently suppliers are hurting. And along with that, you're faced with the prospect of a no-deal Brexit at the end of the year. And I think that double whammy is what car makers are hoping to avoid, because remember that if you have one weak link in that supply chain, the entire thing comes crashing down and everything grinds to a halt. So car makers have a vested interest in keeping them alive and making sure that the supply chain isn't really hampered by multiple events that are happening sort of sequentially, really.
Yeah, and so the cooperation designed to prevent disruption there. Sid, remind us of what the impact of Brexit will be, because there's fears around a no-deal Brexit, but even without no deal, you're still going to get customs checks on some of the flow of items going across UK borders. What's the disruption that the car industry is bracing for?
Absolutely. So the car industry depends on just-in-time manufacturing, whereas so that a part comes in just as they manufacture it. And that's going to have to change, because even if there is a deal, there's still going to be bottlenecks at the border, and there's still going to be customs documentation and everything that needs to be done. So there could be an impact on just-in-time. So car makers are going to have to start warehousing parts and storing parts, at least in the short term, to make sure that there's no disruption to their production, really.
What's the British car making industry look like post-Brexit? I mean, are we going to see a lot of players moving out, or are they holding ground?
At the moment, it's very hard to predict, because everybody is sort of hoping to look at what sort of deal that the UK gets with the European Union. Obviously, a no-deal Brexit would be terrible for the auto industry, because the biggest market for UK car exports are the EU at the moment. And with tariffs coming up, that could really not be a great thing for the industry. So everyone's really looking at the wait-and-watch model, where they're looking to see what sort of deal the UK comes up with, and then see what the impact will be on their production.
Sid, thank you so much. Sid Phillip, Bloomberg's European Airlines and Autos reporter, joining us with the latest on how the autos industry is trying to protect itself from disruption, not wanting to fall foul of competition rules, though, of course. Let's get to your movers then, 25 minutes into the trading day, and this is what we have for you. LVMH falling after filing a Tiffany countersuit, so we've got both sides suing each other, essentially, in the collapse of that particular deal. Daimler also want to keep an an eye on. That stock down by around 1%. The stock trading lower then. Uber offering for free now. That is the joint venture that Daimler operates with BMW. And B&M, this is the discount retailer in Europe. B&M higher. The stock is up by 2.7%. First half EBITDA above the prior range is the call that we got from B&M this morning. So a fairly upbeat outlook coming through from them this morning. Matt?
All right, up next, how could risk assets react to the debate tonight? We put that question to our MLive macro strategist, Laura Cooper. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are 30 minutes into the trading day, and we're looking at losses across equity indexes. Of course, here's the Stocks Europe 600, the broader benchmark index in Europe, also falling right now about 1/3%. If you use the GRR function, the group ranked returns, you can see which sectors are on the move, most of them to the downside, led by travel and leisure, banks and real estate. The only gainers, it looks like, utilities, very defensive, and the stock 600 EURP. I'm not 100% sure what that is. Anna, does that ring any bells for you?
I can't see it. So it's too far away.
I have to say, I've never seen that industry group before, and I notice now that there are a number of different, very strange industry groups loaded up here. So I'm going to go ahead and say, look, most industry groups are down. Let's get the Bloomberg First Word News. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Globally, the confirmed number of coronavirus deaths has hit 1 million, but health experts are warning the real death toll could be twice as many. Developed and emerging economies are struggling to contain the pandemic almost 10 months after it first emerged. The World Bank is warning of a class of new poor, with 38 million more people expected to be living in poverty in 2020. The US is considering fresh sanctions on Iran. Sources tell Bloomberg it may target more than a dozen banks and label the entire finance industry off limits. The move would effectively leave Iran isolated from the global economy. Iran has already been crushed by the loss of oil sales thanks to American restrictions. The UK could be facing a long-term increase in the size of the state, as well as substantial tax hikes. The Institute for Fiscal Studies says it's highly plausible that government spending could hit 45% of GDP by the middle of the decade. That's a level not sustained since the 1970s. It underscores the major shift being brought on by the pandemic. A wildfire ripping through Northern California's wine country has more than tripled in size. It's forcing thousands of evacuations and destroying properties in the region. The glass fire north of San Francisco reached more than 36,000 acres Monday night. A second fire in Shasta County is also raging, having killed at least 3 people. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
Laura, thanks very much. Laura Wright in London. And whilst Laura was speaking, Matt and I got to the bottom of that little mystery. It was the energy sector that was the second best performing in Europe, although it's just slipped to third and it's not now in positive territory. Utilities, anyway, is one sector that is gaining this morning, and it is the only one. Now, traders are waiting for the first presidential debate today between President Donald Trump and Democrat Joe Biden. Political pros on both sides are fretting about the potential for a viral moment that could turn a good performance into a disaster. But what will markets be looking for? Let's analyze the market risks investors could face in the lead up to November the 3rd with our Markets Live macro strategist, Laura Cooper, who's with us. Laura, good morning. So what are markets pricing then for the US election outcome? What is the worst and the best case from a market's perspective?
Well, what markets are pricing in as the base case now really looks to be one of a contested election outcome. So if we look at volatility gauges in the S&P 500 around that November 3rd election day, those are quite elevated. And that's actually extending into the weeks following that election day through to mid-December. So that does signal that markets are positioning for some fireworks around that election day. Now, I think that ultimately the best case scenario for markets, and one that could avoid a kind of a sell-off in risk assets, would be one that there is a wide degree of margin in the outcome, so that it's clear that there is no discretion around who the actual winner is. So there's, the decision will be settled quite shortly in the days that follow. So that will shift focus then on what the policy implications are. I think really at this stage, the worst case for markets is that we have an unresolved outcome that extends through and even potentially beyond that January 20th inauguration day, because that would essentially leave the decision in the hands of the Supreme Court, which could then be escalated to Congress. And I think markets are really not pricing that in yet. Of course, it does remain a tail risk, but I think clearly for markets at this point, it's less relevant for who the actual winner is for now, but it's more a case of whether we will see a clean outcome or a contested outcome.
How do you expect risk assets then to react tonight? I mean, we'll all be glued, I guess, to our screens. Hang on, that's going to be very, very late for me. But I think most people are going to be, who have the chance and are awake, will be watching. What are traders going to be doing?
Well, I think, debates have historically been central to how voters kind of form a view around the election. And I think tonight's debate could actually be more pivotal than is currently appreciated. Just the fact that we do have betting markets signaling that we are seeing a tightening race, but that's in quite contrast to what actual polls are telling us. So polls are indicating that Biden has a clear momentum heading into the last leg of the election race. So I think tonight it's really, I think risk appetite and assets are going to take their cues from whether there is perceived to be a clear winner. So if it's the case that Biden actually comes out stronger, then that would add to his momentum, and that would renew markets' focus on the possibility that we could see a clean Democratic sweep, and what the implications are around that in terms of tax policy, in terms of stimulus packages. So we could actually see higher yields amid curve steepening and some dollar support on the front of that. But on the other hand, if we do see actual Donald Trump gain favor, then that could actually heighten investor concerns around this potential for an extremely tight and contested election, because he is lagging in the polls right now. So ultimately, that would raise volatility and likely weigh on risk assets, and again provide support to the dollar. So I think really the key takeaways are that risk sentiment could be shaken and the dollar could find support. And when we look at kind of what traders are positioning in the dollar heading into tonight, it's clear that we are seeing implied volatility quite elevated overnight across a lot of those dollar pairs like the peso and the yen. So I would expect to look to those specific pairs for cues on kind of how markets are interpreting the debate in the early hours tomorrow morning in Europe.
Okay, yeah, that gives us a lot to watch for. I think I'd describe it as very early in my day, given the time of day that we get up. But let's assume we'll all be glued to it and watching. What about looking further ahead then, Laura, when we get to the actual election day and then the count? What happens if we see a 2000-style contested election outcome, or something that lasts longer than that?
Well, I think, some of the rhetoric that we've seen coming out of headlines suggests that, a contested election that is quite lengthy is a tail risk, but it is a widening tail risk. So if we look back to 2000, so that was when we had the dispute between Bush and Gore, that wasn't resolved until December 12th, so more than 35 days after the election day. So how markets reacted then could provide somewhat of a gauge for the current context. So we did see 10-year rates rally about 50 basis points. We saw volatility spike. And the S&P 500 tumbled almost 5% over that period. But I would kind of argue that today's context is slightly different, just because markets back then weren't actually expecting any kind of contested outcome, which is clearly different today. And it was also at a different stage of the economic cycle. We were just ahead of that 2001 recession back then. But I think this time around, the fact that we do have this political polarization, the fact that we do have mail-in ballots, a high degree of them this time around, that could lead to more risk of contention. And so if we were to see that actually an outcome delayed until inauguration day, that could clearly weigh on risk assets that aren't positioned for that. And actually the last time we saw that happen was back in 1876. So clearly there's a precedent, but it's quite unclear at this point, but certainly something that markets are likely not yet positioned for. But we may get some indications today of how that race could play out.
All right, Laura, thanks very much. Very interesting stuff. We'll keep the 1876 date in mind as well. Laura Cooper there from the MLive blog, talking about all the issues surrounding the debate and the election. Don't miss Bloomberg Television and Bloomberg Radio. We've got special coverage of the debate today / tonight / tomorrow morning, with analysis before and after the event. David Weston is going to anchor full coverage in New York from 8:30 p.m. I believe that's Eastern time, so 8:30 p.m. in New York. That is, of course, 1:30 a.m. in London, 2:30 in the morning here. Up next, Angela Merkel will meet with Germany's 16 state leaders this afternoon to discuss the country's COVID-19 response. The German chancellor said earlier she expected a Christmas virus spike. This is Bloomberg.
Welcome back to the European market open, 43 minutes into a trading session where European equity markets under pressure after the gains of yesterday. Let's get a Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. JP Morgan says most of its consumer staff will continue to work from home until 2021. It's a break with the firm's Wall Street operations, which told senior traders to return to work. Bloomberg sources say the new directive excludes branch workers and some in operations. The consumer unit has around 122,000 staff. LVMH is counter-suing Tiffany weeks after pulling out of its $16 billion purchase of the jeweler. The French luxury giant says the decision was driven by the French government's request to delay closing the deal. It's also citing Tiffany's mismanagement during the pandemic. Tiffany sued LVMH earlier this month to force it to go ahead with the deal. Tesla plans to mine its own lithium, securing rights in Nevada. Bloomberg sources say the move comes after dropping plans to buy a company in the state. We're told the e-car maker held discussions with Cypress Development but failed to reach a deal. It's all part of Chief Executive Elon Musk's plan to slash battery costs by 50%. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much. Laura right there in London with your news. Now, here in Berlin, Angela Merkel is going to meet Germany's 16 state leaders to discuss the country's COVID-19 response. The German chancellor said earlier she expected a Christmas virus spike. Joining us now is Chad Thomas, our Western Europe managing editor. Chad, what are we expecting to come out of this meeting this afternoon? I believe she's going to hold a press conference shortly thereafter.
Yeah, that's right, Matt. We're hearing that they're looking at ways to sort of limit public gatherings in Germany, in particular in those areas where there would be some sort of an outbreak. Some of the figures we're hearing are that they would limit sort of private gatherings in homes to 25 people and public gatherings to 50, again, in those areas with the greatest outbreak. But this really depends on whether she can get state leaders to go along with her. We've seen throughout this process how difficult that can be. One has to remember, I know you know this, Matt, but Germany is made up of 16 federal states, so states have a lot of power, and we're seeing that play out through this pandemic with really a patchwork of different regulations and rules in place across the 16 states. And this is what Merkel is trying to get some agreement on with state leaders so that they have one sort of system in place across the country for when there is an outbreak.
Yeah, that's interesting. Chad, good morning to you. We often look at Germany, or we have looked at Germany through this pandemic for an example of a place that certainly has not escaped the impact, but maybe has been dealing with it quite effectively. How does Germany's position now fit then with the wider European picture? Because other parts of Europe have already seen this second spike really kicking in.
Yeah, Anna, it's a good point. Germany has managed this fairly well. While cases have been heading upward, they're still around 2,000 new confirmed cases a day. Just to give some comparison, last week we were seeing in France anywhere from 13 to 16,000 new cases per day. So by comparison, Germany has it under control in some senses. Chancellor Merkel, though, privately warned people within her own party at a meeting yesterday. We're told by sources that if Germany doesn't take action, she sees cases potentially hitting upwards of 19,000 a day by the end of the year, by the Christmas holidays, obviously something that she wants to avoid and why she's pushing for these changes in the rules.
What are we seeing, Chad, as far as, we've had these spikes in infections, but we haven't really had a subsequent jump in deaths, fatalities, or in intensive care unit occupation. So are we expecting that to catch up?
It's a good point, and it sort of also depends upon where you're looking. That certainly is the case, what you're saying, in a place like Germany, but the hospitalizations have been ticking up in places like Spain, in particular in the Madrid region, and that's an interesting case as well because Spain also has this federal system, and there's actually a fight going on right now between the federal government in Spain and the Madrid regional government over whether the city should go into a more severe lockdown because of the fact that there is actually an uptick in the hospitalizations there. We actually expect to hear more on that front later today in Spain or perhaps tomorrow.
Chad, thanks very much. Thanks for the update. Bloomberg's Chad Thomas keeping us up to date with what's going on fighting the virus across various parts of Europe. Now, Tesla has secured its own lithium mining rights in Nevada after dropping a plan to buy a company there. That is according to Bloomberg sources. The EV maker has vowed to slash its battery costs by 50% and deliver on a promise to bring a $25,000 electric car to market. But that plan doesn't seem to have fazed China's most promising electric vehicle startups, with executives at the Beijing Auto Show telling Bloomberg Elon Musk can bring it on. We spoke to the CEO of NIO about the threat Tesla poses, as well as about demand for the company's latest model.
In fact, demand in July and August was even stronger than actual deliveries, as we had a conservative sales estimate at the beginning of the year. Our supply chain partners were not ready for even higher production. We are working to solve this problem in the current quarter. We believe production capacity will have improved in September. We will keep boosting capacity in the coming months, especially for the EC6, which started deliveries at the weekend.
Elon Musk has talked about a $25,000 Tesla. What do you know about these plans? Do you imagine that that would have to be manufactured, that $25,000 Tesla, in China, given the labor costs and the supply chain?
Undoubtedly, battery costs for the entire industry have been declining. We reached a gross margin of 10% in the second quarter, and it will increase each coming quarter. I believe the overall battery cost decrease will help promote EVs. In the Chinese market, the average price for our cars is more than $60,000, which is $15,000 higher than Tesla's average in China. So we have a lot of work to do in this market. In the long term, we will definitely launch more cheaper products, but that's not our priority at the moment.
Elon Musk has talked about potentially producing 1 million units in China. How much of a challenge is Tesla now?
I think auto products aren't only about cars, but more importantly, serving customers well. For families, a car isn't a small expense like clothes. It's big spending, and it's closely related to safety. So we pay a lot of attention to service and quality, which I believe will be the biggest challenge for all automakers undertaking rapid expansion.
And that was the Chairman and CEO of NIO, William Li, speaking exclusively with Bloomberg's Tom McKenzie from the Beijing Auto Show. Coming up, a glacial pace. It will take 200 years for female fund managers to reach parity with male counterparts. At least that's according to one report. We'll look at that research next. This is Bloomberg.
Welcome back to the European Market Open, 54 minutes into your trading session, and European equity markets are down between 0.5% and 0.8%. US futures have been worsening as we get through the session, but just down 0.3% or so. Let's talk about equality, and it will take 2 centuries for female fund managers to reach parity with their male counterparts. That's if the current rate of promotion continues, according to research by Citywire. For more on this, Danny Berger joins us now. And Danny, is gender diversity within the money management industry, is it improving at all?
Anna, it's improving, but barely. It's moving at such a slow pace. To give you an example, currently 11% of funds are managed by women. The big improvement there, 4 years ago, it was 10%. So that's a 1 percentage point increase over the past 4 years. Pretty meager. To put some numbers behind it, that's $15 trillion in Citywire's database, and just 2.9 of that is managed by women. The good news here are there are improvements being made. At least organizations are attempting. More clients are pressuring their fund managers to include more diversity among their ranks. And then there's charities like Girls Are Investors, which aims to promote more young women and girls into the industry to really help the beginning part of the pipeline. I spoke with one of their co-founders, Anne-Marie Florby, who's also a man.
As horrible as COVID-19 has been, it's actually presented us with a strange opportunity in that we've moved the entire program online. And by moving it online, we're actually able to reach so many more girls outside of the M25 and across the UK. And it's been really interesting to see the connection we're getting from parts of the country that we would never have been able to reach through face-to-face talks. I don't think there's a lack of talent. I think we just need to get them in the door first.
And Anna, Matt, that last part there she referred to was in response to me asking her, what do you make of the Wells Fargo CEO's comments that there isn't enough talent in the pipeline to promote them? She clearly disagreed with that vehemently. She says that there are just a lot of biases against women and young girls, young women to the start. There are a lot of myths surrounding the money management industry that you need a lot of typically male sort of attributes. And part of their work is to dispel these myths. Anne-Marie Florby, for her part, is confidence that they can make a difference. Anna, Matt?
Danny, thanks very much. Danny Berger there talking about the pipeline. That's it for the European Open. Stay with Bloomberg Television. Up next, it's surveillance as Anna and I go off to join Bloomberg Radio.
coronavirus deaths top 1 million. Some experts estimate the real figure could be double. European stocks decline. Attention shifts to tonight's U.S. debate. Donald Trump and Joe Biden face off in Ohio in an event that could shake up the race. And Christine Lagarde says the ECB is ready to act further to aid the recovery. This as Chancellor Angela Merkel could place further restriction measures to stop the spread of the pandemic. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, the focus, of course, on the markets is firmly on the number of infections rising not only in Europe, but in specific European countries, such as Germany. So we'll have a full roundup of what exactly is going on in Germany. Let's get to the markets, and if you look at European stocks, they're down some 0.5%. Now, the focus is also on some of the currencies. I know there's euro-dollar on the back of what we could hear from, actually what we have from Christine Lagarde, and what we could hear further as she's set to give a couple of speeches later in the week as well. But the end of quarter rebound in global equities seems to have cooled. Investors, again, trying to assess the latest efforts towards more U.S. fiscal stimulus, but also the rising toll of the pandemic. Now let's get straight to the Bloomberg First Word News. Here in London with me is Leanne Gerrans. Hi, Leanne.
Hi, Francine. The U.S. is considering fresh sanctions on Iran. Sources tell Bloomberg it may target more than a dozen banks and label the entire finance industry off limits. The move would effectively leave Iran isolated from the global economy. Iran has already been crushed by the loss of oil sales thanks to American restrictions. Now, French President Emmanuel Macron says he's agreed to meet the opposition leader of Belarus. That's as he looks to persuade his EU colleagues that he's serious about confronting Russia. The EU is holding a summit later this week to discuss potential sanctions against Moscow for not cooperating on Belarus. Here, the UK could be facing a long-term increase in the size of the state, as well as substantial tax hikes. The Institute for Fiscal Studies says it's highly plausible that government spending could hit 45% of GDP by the middle of the decade. That's a level not sustained since the 1970s. It underscores the major shift being brought on by the pandemic. And a wildfire ripping through Northern California's wine country has more than tripled in size. It's forcing thousands of evacuations and destroying properties in the region. The glass fire north of San Francisco reached more than 36,000 acres on Monday night. A second fire in Setauket County is also raging, having killed at least 3 people. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, Tesla has secured its own lithium mining rights in Nevada after dropping a plan to buy a company there. That's according to Bloomberg sources. Now, the EV maker has vowed to slash its battery costs by 50% and deliver on a promise to bring a $25,000 electric car to the market. Now, globally, the confirmed number of coronavirus deaths has hit 1 million. Health experts, of course, are warning that the real death toll could be twice as much. Developed and emerging economies are struggling to contain the pandemic almost 10 months after it first emerged. Now, the World Bank is warning of a class of new poor, with 38 million more people expected to be living in poverty in 2020. Meanwhile, President Trump and the Democratic nominee Joe Biden also square off for 90 minutes in their first debate later today. Political pros on both sides are fretting about the potential for a viral moment that could turn a good performance into a disaster. Well, joining us today is Nikhil Srinivasan, Chief Investment Officer at Partner. Nikhil, thank you so much for joining us. First of all, when you look at the market functioning and just the fact that we could have a lot more volatility as we get into the U.S. election, as we try and figure out stimulus and these number of cases of infected rising, do you worry about liquidity? Do you worry about the functioning of the markets?
I worry about the next few months because we're heading into an election. You've got fiscal on hold. You've got fiscal on hold pretty much everywhere, particularly in the US. You had fiscal reset in the UK. So yes, I worry about liquidity, and therefore I worry about all risk assets really going into the next few months.
So how do you decide, Nikhil, where to invest? First of all, do you prefer equities to other asset classes because at least you can get good returns? And is it about innovation or is it just about safeguarding?
Okay, let's. Okay, well, the last time I was here, I said the S&P was peakish, gold was peakish by the Chinese currency, and all that has sort of come to pass. I think the dollar hasn't really moved much lower since we last spoke, but I think that is inevitable. I think when you look at equities, you've got to first of all stop thinking about PEs. That doesn't really make sense, especially in today's world. You've got to think about revenues and you've got to think about cash flows. That's the first thing. The second thing you think about, you can't just say, well, tech's expensive, we shouldn't buy tech. I think innovative companies are going to do well. Companies that benefit from consolidation are going to do well. And companies now, because of COVID, that benefit from localization, whether it's a Chinese company in China or anywhere else, are going to do well. So it's become more difficult to be a stock picker if you're looking to be an active manager. But there are ways to make money. I just don't think we should just throw things out. What is happening right now is a lot of people are having very extreme views on the market or on the economy or on COVID, whatever it is. I think the truth, as usual, is somewhere in the middle. So you should look at innovative companies. You've got to look at companies that are consolidating, and you've also got to look at companies that have been beaten up. Because if the federal side of things continues in terms of fiscal spending, then the underperformers, energy, banks, all will actually have a pretty good 2021.
Nikhil, is there anything that the market is mispricing or that they're getting wrong?
Is there any... Sorry, I didn't hear that question.
Is there anything that they're mispricing? I don't know whether there's a belief, whether you worry that inflation is around the corner and the market isn't pricing that in, whether Brexit could be a hard Brexit, a no-deal Brexit, and the market isn't pricing that in.
I think people are mispricing a whole bunch of things because they're using traditional methods of trying to look at markets. I think inflation can only come with a much weaker dollar. Okay, and while the dollar has dropped significantly, it hasn't dropped enough. If you're talking about inflation as a consequence of a dollar decline, you're talking about a 20-30% decline from here. I don't see that happening in the next several months. So I think the market is mispricing, inflation. I think, therefore, the market's mispricing gold. We talked about gold last time. I think gold doesn't go anywhere for a period of time. I think people have to remember gold is an inflation hedge. It's not a reflation hedge. And so to me, I think the market's mispricing gold, it's mispricing inflation. I don't know if it's mispricing credit. I think bond yields are going to stay low. So at 66 or 65, the 10-year bond yield is really telling you that the Fed's not going to increase, growth's really not coming back in an accelerating way, inflation's not coming back strongly either into 2021. So I think the market's got that right. I think perhaps high yield will sell off more. I think risk assets from a credit point of view are more vulnerable, especially going into the next 1, 2, 3 quarters, because you're going to have a Q3, which has been a V-shape as expected, a Q4 that's going to be flat because of fiscal backing off. I think Q1 is going to be quieter as fiscal starts on again. And so I think really what you've got is the next 6 months, 9 months, where people are going to start to worry about bankruptcies, defaults. I'm talking about small businesses here. So I think that credit by default will actually take a lot on the chin versus other asset classes.
Nikhil, thanks so much. Nikhil Srinivasan there from Partner stays with us. Now, don't miss Bloomberg TV and radio's special coverage of the first presidential debate today with analysis before and after the event. Our David Weston anchoring full coverage in New York from 8:30 p.m. Eastern Time. That's 1:30 a.m. in London. This is Bloomberg.
is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Uber is considering buying Daimler and BMW's ride-hailing joint venture. Sources tell Bloomberg the US firm is interested in Free Now, but we are told a deal could be complicated by the challenging market, which may make it difficult to agree on a price. A potential tie-up could boost Uber's market share in Europe and Latin America. LVMH is countersuing Tiffany weeks after pulling out of its $16 billion purchase of the jeweler. The French luxury brand says the decision was driven by the French government's request to delay closing the deal. It's also citing Tiffany's mismanagement during the pandemic. Tiffany sued LVMH earlier this month to force it to go ahead with the deal. And Tesla plans to mine its own lithium, securing rights in Nevada. Bloomberg sources say the move comes after dropping plans to buy a company in the state. We're told the e-car maker held discussions with Cypress Development, but failed to reach a deal. It's all part of Chief Executive Elon Musk's plan to slash a battery cost by 50%. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, European Central Bank President Christine Lagarde has a message for the Eurozone. We're not out of the woods yet. In a hearing with EU lawmakers, Lagarde said the ECB is ready to deploy more monetary stimulus to aid the recovery if needed. Let's take a listen.
The impact of the pandemic is still being felt across the euro area. People are losing jobs, people are losing income, businesses are facing difficulties, and prospects about the future remains uncertain. Annual headline inflation in the euro area stood at minus 0.2% in August and is expected to remain negative in the coming months. Clearly, we are far away from the goal that we have, which is close to but below 2%, and we are not complacent about it. Euro area real GDP is only expected to recover to pre-crisis levels in late 2022. While euro area economic activity rebounded in the third quarter, the recovery remains incomplete, uncertain, and uneven.
Let's get more on this with Nikhil Srinivasan from Partner. And Nikhil, we are also hearing from Mr. Scholz, of course, of Germany, the finance minister, saying that Germany's debt ratio will rise to about 75% of GDP. Do you believe we're underestimating how much countries in Europe will have to spend to get out of this recession?
Yeah, yes, they will, but does it really matter, Francine? Everyone's borrowing at zero or negative. I think one of the things people sort of miss is it doesn't really matter how much you borrow. If you're borrowing for nothing, which is essentially what people are doing right now, Germany's borrowing for negative, and that people have to realize this money goes into the market for consumption. So you use the money you borrow for consumption, keeps the economy going, and so frankly, borrowing at zero doesn't really mean anything. At the end, lenders will not lose faith in your bonds as long as they believe you're going to pay them back. Japan is your classic example, 250% debt to GDP. So when in the UK they start to get nervous, there was an article today which said, oh, we're going to have to do austerity because debt to GDP is 100%. I have to laugh because France is 140, Italy is going to be higher. Who cares? You need to spend to get the economy back. You need to address the social inequalities that have manifested largely also because of COVID. And this spending is all boosting consumption, which is boosting GDP. It makes up for lost income. So to me, this debt to GDP thing, which economists have harped on for decades, I think is a complete, I think it's really a waste of time to think about. Really what you've got to think about is how much am I borrowing at? If you can borrow 30-year money for zero, which essentially, net of inflation, maybe a negative yield, why not borrow if you feel the use of those proceeds will be beneficial for the economy?
But at some point, should we start worrying about debt, Nikhil, or will investors worry about debt, maybe even wrongly, but will the focus turn to that? And actually, is there a very small window for a lot of these countries to spend this money wisely? If you don't kickstart the economy, then you're left with legacy problems that, for example, Italy's had for the last 20 years.
Look, Italy is part of the Eurozone. I think we can argue about which countries deserve to borrow at zero, others don't. My point is, as you're a single market, and I think with the European recovery bonds and all, I think we are clearly now a single market. It doesn't really matter. I think people will worry about debt, but that's for the next generation. And if you've created a domestic product out of that debt, which is what I'm suggesting you will do, it is all right to borrow. So I don't understand this hand-wringing about borrowing, especially here in the UK and other parts of the world. Japan is a good example, 250% debt to GDP. 2/3 of their bond yields are negative. Nobody's worried about the Japanese not paying back their debt. In fact, every time there's a risk off, people buy Japanese yen. So to me, to the extent that Japan is a model, and I'm not suggesting it's a good or bad model, it is a model, you should borrow money, especially when you're trying to get your economy to recover. In this country, between the fits and starts of shutdowns, startups, I think you are headed towards stagnation. And I think borrowing is the one thing you can do that'll actually help you. And I think this goes for the US as well. I think whatever happens, whoever wins the election, I don't think is that actually that material, because fiscal policy is going to be very, very loose in the US in 21 and 22. The only point is people say, well, that's going to create inflation. Sorry, yes.
No, I was going to ask you, does this make sense to actually try and generate inflation, or is this also to just make it a bit of more of a fairer society? Otherwise, 4 or 5 years, we go back to a very populist agenda.
Well, look, I think that's the big thing, right? People say, well, if you do monetary policy and fiscal policy together, they're a recipe for inflation. There is some logic to that. I think if you actually devalue your currency through massive spending, fiscal spending, there's a risk of inflation. But there are a few headwinds for inflation. The first and most important headwind is technology. Okay, technology essentially lowers the cost of everything. It does not increase wages. Okay, it makes things more efficient. So technology is a headwind that we didn't face 30 years ago, 40 years ago when there was inflation. The second thing is demographics. People are older. The demographics in the world, in the US in particular, it's an older demographic. So I am not as convinced that running a large deficit for the next couple of years is going to be super inflationary. Now, if the Treasury comes out and says, we want a weaker dollar, and if there's very clear sense that the US government wants to debase the dollar, and I'm talking about more than 5 or 10%, but 15, 20, 30%, and sure, there'll be inflation. But to me, the only inflation I can feel confident about everywhere in the world for the next 5, 10 years is asset price inflation, which started after the 08 crisis and continues today, and is actually just magnifies the inequalities in society. The reason people will have to spend, the reason fiscal spending will continue to increase, because governments will have to address this inequity that we see in society. Nobody really likes to talk about it, but the fact is everybody writing about inflation doesn't really suffer from the psychology of financial insecurity. And when you have that financial insecurity, you save money, you don't spend, you worry about losing your job. These are the basic things, right? So to me, I'm a cynic about just inflation running away. It just seems very hard to fathom.
Right. Nikhil, thank you so much for joining.
Morning, ladies and gentlemen. I'm placing a new order to sell short Japanese yen at 105.609. Let's see if it will be able to reach this order. 105.609. Okay, order placed.
This is Bloomberg Surveillance. I'm Francine Lacroix here in London. Now, a SPAC mania continues on this week. Yesterday, shareholders of Tortoise Acquisition Corporation approved a merger with Helion, a battery-powered truck company. The move allows Helion to go public without the traditional IPO and will make its 28-year-old founder a billionaire. Well, joining us now to discuss all of this is Danny Berger. So, Danny, good morning. This isn't the first time that we've heard of a big SPAC this year. What's so special about this one?
Francine, I really think that this particular one, taking Helion public, is very emblematic of the frenzy around SPACs this year. Just to remind everyone, it's a special acquisition company. A blank check firm goes public, and its sole purpose is to find a private company, merge with it, thereby taking it public without ever having to file an IPO. So this one, Tortoise Acquisition Corporation, has decided to merge with Helion. It makes parts for electric trucks, so not quite like Nikola making the whole truck here. Well, it's taking it public. It should go this week, and the company has yet to produce any meaningful revenue. In fact, it's forecast not to have any revenue really until 2022. Despite that, it has a $7 billion valuation attached to it. That means once it goes public, its founder, which is a 28-year-old graduate of Carnegie Mellon Engineering, will have a net worth of $1.5 billion, Francine.
So what sort of riches is this deal actually poised to reap, despite the fact that Helion has almost no revenue?
Exactly. Well, as I already mentioned, the founder, Thomas Healy, stands to gain a lot from this, but really we can't overlook how beneficial this has been for Tortoise, again, the blank check company that's acquiring Helion. It put about $7 million into this blank check company, according to Bloomberg Intelligence's Chris Bryant, Bloomberg Opinion's Chris Bryant, rather, and it stands to gain $450 million from the acquisition itself. That means it's getting 80% of the cash proceeds. Usually for an IPO, an underwriter would only get 7%, Francine.
Thank you so much, Danny Berger there with the very latest on the SPAC. Now, coming up, the pandemic shut jewelers for months, but are there signs of recovery now? We'll discuss the present and the future of the sector with the chief executive of the iconic Italian brand Pomellato. That's coming up shortly. This is Bloomberg.
Position open on Japanese yen. It's a short at 105.609. I opened short at 105.609. Okay.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a taxi.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Globally, the confirmed number of coronavirus deaths has hit 1 million, but health experts are warning the real death toll could be twice as many. Developed and emerging economies are struggling to contain the pandemic almost 10 months after it first emerged. The World Bank is warning of a new class of poor, with 38 million more people expected to be living in poverty in 2020. Over in the US, House Speaker Nancy Pelosi says the White House will have to agree to much more spending to secure a fresh round of stimulus. The comments come as Democrats released a scaled-back plan of $2.2 trillion of support. Discussions between Pelosi and Treasury Secretary Steven Mnuchin are ongoing. And the European Central Bank says it's ready to deploy more monetary support if needed, addressing lawmakers in the European Parliament. President Christine Lagarde warned the recovery is uncertain and incomplete. Consumers are cautious to spend and companies reluctant to invest. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now let's focus on jewelry. And the closure of factories, stores, and airports to contain the coronavirus pandemic has had a sweeping negative effect across the sector. There are now signs that demand is recovering, but only in certain regions. In China, for example, luxury customers have started spending again, driving the country's retail recovery. Now, luxury remains under pressure across Europe and North America. Well, one of these iconic jewelry companies who shut for 3 months is the Italian brand Pomellato. Established in 1967 and worn by Kate Blanchett at film premieres, the group is actually owned by Kering. And we're delighted to be joined today for an exclusive conversation by Sabina Belli, the chief executive of Pomellato. Sabina, thank you so much for joining us here on Bloomberg Surveillance. Talk to me a little bit about how much delayed spending you saw in the 3 months where you were closed because of COVID, and how much of that revenue you'll be able to get back from customers.
Thank you, Francine. The first thing to be said is that jewelry is a very long time and safe industry in the eyes of our clients, because when you buy a piece of jewelry, you buy a piece of eternity. So this is kind of a safe investment. And there is also a question of celebration. You buy jewelry to mark a very special occasion. So there's always a celebration, even during pandemic, and a birthday, an anniversary. And we saw our clients coming back after lockdown, wishing to actually celebrate after time what they missed during the lockdown. And yes, we have kind of a recovery these past days, and we are quite optimistic for the future.
Sabina, where are you seeing a recovery? Is it a specific region, or is it a specific section of some of the things that you sell? So you have high-end jewelry, you have like a medium range, and a more accessible range.
One of the most strongest problems nowadays is the lack of tourism. Tourists were obviously keeping up the sales very much, and so now we see clients coming from local cities. For example, people that are traveling less now across Europe, for example, for shopping occasions, and so they buy locally. And basically, the big regions such as China, of course, but also Japan and the main European countries, France, Germany, Italy, are still on the celebratory side in terms of jewelry.
Give me a sense of how COVID-19 has actually, impacted your strategy longer term. Are you going to sell more to the APAC region because we see demand there going quite strong, or are you going to sell more on the internet?
Well, yes, we are going to sell more on the APAC region, also for obvious reasons of investing in a marketplace that is absolutely very energetic. The slightest difference is in the way we sell. Basically, in jewelry, there is a lot of one-to-one client relation. Our sales managers calling their clients and establishing this very personalized relationship that can be made even without going to the store. So distance, remote sales is really the name of the game today. In America, they call it by the curb, because basically you can call your sales assistant, choose the good, and the parcel is delivered to you on the curb. And you don't even have to interact really in the store for all the safety reasons we know. So it's a mix of strategically choosing the areas in the world where the clients are keen to still purchase, and methodologies in terms of how to approach the clients that are slightly different than pre-COVID.
So does it mean, Sabina, that we could see the closing of certain stores, or does it mean, for example, that the way you look at the geography will change? Is it also making it more difficult, for example, to source gems? Or is it something that just happened for a couple of months and now you're back on a more normal footing?
Well, fortunately, I think that the big companies and big brands like us, we have a great treasure in our vaults with gems and stones that have been acquired over years. And so that is not a problem short term. And I don't think it will be a problem in the future for sourcing. The most important thing is to really create a situation where the experience of buying an exceptional product remains an outstanding experience. So we have to crack the way to make the online experience absolutely as memorable as a store experience. And so that is really a new way that I would say that this is also what COVID pushed everybody to be much more innovative, much more keen to find new ways of, interact with the clients that is not, again, the traditional store interaction. And for that, I'm quite, excited, because there is a totally new frontier to go find. And we see that the initiatives that we have started putting in place, like this very special and very intimate moments with our faithful clients, are paying back. And the storytelling, the reasons to celebrate with a jewel are very important matters, and I'm glad that we can be on that front with our brand.
Sabina, I was speaking to actually our Bloomberg Intelligence, analysts on luxury, and they were saying the focus on watches and luxury in general is a smart one, because it'll probably be one of the most increasing sales growth in the coming years, because of durability, and it's just like a slightly different section. But given all of the talk that we've had over LVMH and Tiffany, that really has gone wrong. Are you expecting more consolidation in the jewelry phase? Does it actually impact any of your work?
Well, unfortunately, I cannot predict these type of things, because it would be too easy to try to foresee the future. But for sure, brands and companies that have a very legitimate place on this market, because they are admired, recognized, seriously established for years, have much more chances to survive, for sure, vis-a-vis those brands that have been created more recently, maybe on a marketing concept simply. So on my part, I am very keen to see luxury still developed on the basis of quality, preciousness, craftsmanship. And in Pomellato, for example, we have 100 master goldsmith in-house that bring their savoir-faire to each and every piece of our jewelry. And that is a point of difference that consumers understand, and they do make the difference. And therefore, all these big companies that have, again, this very strong and fearful attention to quality and details and what makes the difference and the preciousness are the ones that are going to win the game.
How much does size matter, Sabina? How much bigger do you think Pomellato can become in the next 5 to 10 years?
Well, we are definitely aiming at growing all over the world. Of course, our domestic markets are rather European so far, but the investments, of course, are very much skewed to Asia. But again, this is a brand born 50 years ago in Milan, in Italy, with a very strong sense of Italian elegance and style. And I think that, you know, the Made in Italy is basically a brand per se, and has this amazing attractions all over the world because it says this is elegance, this is style, this is that touch of class that Italy has been recognized for centuries. And so I trust that this brand can really develop a lot, also thanks to this added value, to this twist that comes from our origins and the absolute Italian genius that is really recognized all over the world.
Sabina, thank you so much for joining us today. Sabina Belli, they're the chief executive of Pomellato, and we'll have plenty more, of course, on luxury throughout the day. But let me also bring you some up-to-date comments from the Turkish finance minister, updating us actually on what they're expecting for growth. So GDP in 2021, according to Turkey, will be at around 5.8%. If you look at what we've been seeing for this year, it seems that GDP will only grow 0.3%. That's a huge downwards revision actually from the Turkish government, and the finance minister says despite that, some of the financial measures being put in place will be removed gradually. We'll have plenty more, of course, on Turkey and some of the emerging markets. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. JP Morgan says most of its consumer staff will continue to work from home until 2021. It is a break with the firm's Wall Street operations, which told senior traders to return to work. Bloomberg sources say the new measures exclude branch workers and some in operations. The consumer unit has around 122,000 staff. LVMH is countersuing Tiffany weeks after pulling out of its $16 billion purchase of the jeweler. The French luxury brand says the decision was driven by the French government's request to delay closing the deal. It's also citing Tiffany's mismanagement during the pandemic. Tiffany sued LVMH earlier this month to force it to go ahead with the deal. And Japanese telecoms giant NTT plans to turn its wireless carrier unit, Docomo, into a wholly owned subsidiary. The buyout is worth around $40 billion. That's a more than 40% premium on Monday's closing price. Given NTT already controls 2/3 of the wireless carrier, any proposal is all but guaranteed to pass. The deal is the largest ever tender offer for a Japanese company. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Now, UK car makers have formed a united front to protect the industry's supply chain. The aim is to minimize the risk of insolvencies as companies face the combined threat of COVID-19 and a no-deal Brexit. Under the plan, suppliers in financial difficulty will be able to lean on car makers for improved payment terms. Well, joining us with all of this is Bloomberg's European Autos reporter, Sid Phillips. Sid, great to have you on the program today. This is a really important story, and it's basically about some of the car makers getting organized. What are they exactly doing?
Morning, Francine. So the automakers are coming together and they're trying to create a plan under the auspices of the SMMT, which is the industry body. And essentially what they're trying to do is safeguard the supply chain, especially at a crucial time when car makers and consequently suppliers are dealing with the twin effects of the COVID-19 crisis, as well as the uncertainty as we head towards December 31st when the transition agreement on Brexit ends.
So, Sid, why are car makers struggling so much, and what's happening to suppliers?
Yeah, so car makers are struggling because obviously at the beginning of the year you had the lockdowns which impacted production, and production hasn't really come back in a big way because also there's a shortage of demand in the export markets, and a majority of the cars made in the UK are exported. And because of that, car production is down about 40% in the first 8 months of the year, and that's had a cascading effect on suppliers, and suppliers obviously depend on car makers to get their money and stay in business, and car makers consequently also have to deal with the issue that if suppliers go under, then it could make a massive hole in their supply chain and completely hold production.
Sid, why is Brexit such a concern for UK car makers, maybe more than any other industry?
Absolutely. So Brexit's a major concern for two reasons. One is that a lot of supplies for car parts in the UK come from the European Union, and obviously with Brexit, there may be tariffs in the event of a hard Brexit. And also, a large number of the cars made in the UK are exported to the European Union. And so again, there's the question of tariffs, and while tariffs may not have that much of an impact on expensive luxury cars, car makers such as Nissan, which make entry-level models and mid-size models which have very low margins, could be hit by it badly.
Thank you so much. Bloomberg's European Autos reporter there, Sid Phillip. Now let's keep it on autos, and our reporter Tom McKenzie went to the Beijing Auto Show and spoke to the chief executive of NIO about the threat Tesla poses, as well as about demand for the company's latest model.
In fact, demand in July and August was even stronger than actual deliveries, as we had a conservative sales estimate at the beginning of the year. Our supply chain partners were not ready for even higher production. We are working to solve this problem in the current quarter. We believe production capacity will have improved in September. We will keep boosting capacity in the coming months, especially for the EC6, which started deliveries at the weekend.
Elon Musk has talked about a $25,000 Tesla. What do you know about these plans? Do you imagine that that would have to be manufactured, that $25,000 Tesla, in China, given the labor costs and the supply chain?
Undoubtedly, battery costs for the entire industry have been declining. We reached a gross margin of 10% in the second quarter, and it will increase each coming quarter. I believe the overall battery cost decrease will help promote EVs. In the Chinese market, the average price for our cars is more than $60,000, which is $15,000 higher than Tesla's average in China. So we have a lot of work to do in this market. In the long term, we will definitely launch more cheaper products, but that's not our priority at the moment.
Elon Musk has talked about potentially producing 1 million units in China. How much of a challenge is Tesla now?
I think auto products aren't only about cars, but more importantly, serving customers well. For families, a car isn't a small expense like clothes. It's big spending, and it's closely related to safety. So we pay a lot of attention to service and quality, which I believe will be the biggest challenge for all automakers undertaking rapid expansion.
Well, that was the NIO chairman and chief executive, William Li, speaking exclusively with Bloomberg from the Beijing Auto Show. Now, coming up, Donald Trump and Joe Biden square off in their first presidential debate tonight. But will it really move the needle? We'll discuss the importance of the event next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, it's 5 weeks to the election, and today, President Donald Trump and Democratic nominee Joe Biden square off for 90 minutes in their first debate. It's held in the crucial swing state of Ohio, and with many voters already casting their ballots, this first debate could be the most important. Well, joining us now is Kat Hunter from our politics team. Kathleen, how big of an issue are Trump's taxes likely to be tonight?
Well, I think certainly we know that the tax issue is one that's really exploded onto the scene in the last, 48 hours, and it certainly gives an advantage to Joe Biden. It gives him a chance to paint this contrast between, his characterization of Trump as a product of Park Avenue and his characterization of himself as a product of, a hard-scrabbled youth spent in Scranton, Pennsylvania. And so I think that is what we would expect from Biden to emphasize tonight. And, the extent to which, though, this really changes voters' minds, I think we know that 1 million Americans have already voted. I think that we know that there's a very small percentage compared to past elections of undecided voters. So it certainly gives Biden an in to attack Trump tonight, but I don't know how many minds are really going to be changed because of it.
So what could change minds, Kathleen? First of all, if you look at the undecided voters, I mean, there are not that many that are undecided. How is this debate different from the first face-off between, for example, Donald Trump and Hillary Clinton in 2016?
Well, I think one of the main differences here could be that, we have now an incumbent President Trump, not two candidates who are vying for their first chance at the White House. And so I think that this could be different because, there's one thing to see Trump as a candidate and another to see him as a sitting president with Biden as the challenger. And Trump has spent a lot of time and energy trying to lower expectations for Joe Biden, or lowering expectations, whether or not that was his intent, by talking about, Biden as Sleepy Joe, talking about raising questions about Biden's mental acuity. And so I think that has the effect then of lowering expectations. And so I think there is also an opportunity for Biden here to exceed those expectations. The risk for him is that he's very gaffe prone. And so there's always the possibility of an unforced error and something that he does to damage his campaign and himself, the type of thing that could become a viral moment that plays into Trump's hands and the expectations that Trump has set for him.
Kathleen, more than a million Americans have already cast their ballots. Is it more than ever?
Yeah, it's the highest number we've seen so far, and I think it's really indicative of a couple of things. I mean, obviously, it's a fall-off effect of the coronavirus and the fact that, states have made it easier for people to vote by mail, to vote not in person, to vote ahead of Election Day. But I think it's also indicative of the fact that, a lot of voters really have already made up their minds about these candidates and don't feel like they need to wait to watch these 3 presidential debates that we're going to see in order to make up their minds. And that has the effect of sort of downplaying the significance of the debates, really.
Thank you so much. Our Kathleen Hunter there with the very latest on the debate. I know a lot of people will actually be staying up, or either you go to bed late or you wake up early because it's in the middle of the night London time. Now, don't miss Bloomberg TV and radio's special coverage of the first presidential debate today with analysis before and after the event. Our David Weston will anchor full coverage in New York from 8 p.m. New York time. That's 1:30 a.m. in London. Now, coming up, Bloomberg surveillance continues in the next hour. Tom Keene joins me out of New York. This is Bloomberg.
another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
Coronavirus deaths top 1 million. Some experts estimate the real figure could be double. European stocks decline. Attention shifts to tonight's U.S. debate. Donald Trump and Joe Biden face off in Ohio in an event that could shake up the race. And Christine Lagarde says the ECB is ready to act further to aid the recovery. This as Chancellor Merkel could place further restriction measures to stop the spread of the pandemic. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London, Tom Keynes in New York. Tom, I have to say, all eyes in the debate this evening with Joe Biden going off against President Trump tonight. The focus is also in what we've heard from Christine Lagarde that could move fixed income in Europe, but also Euro, saying we are not over this. We may see more measures actually needed, both from the fiscal and monetary side, to deal with rising infections in Europe.
A little bit of a rebound in Euro today. The markets are very tepid, but I know Prime Minister Johnson will be making comments in some form here as well, with the virus really front and center. I actually just looked at the cases, death statistics, Francine, and I must admit, when you look at the cases, it is really gives pause on the case growth that we've seen across Europe. As to the debate, Kevin Cirilli and David Weston in Cleveland for the debate. It's a late night debate, Francine. I'm sorry, you're going to be up at a god-awful 2 a.m. to see the drop on this. But I'll tell you, it's really something. I've got to do a quick study of the debate history, Francine. I would suggest you could go back to Kennedy and Nixon for a debate of such interest.
Yeah, I mean, you know, you just wonder where it will go. So I know probably everyone will be watching it. Now let's get straight to the Bloomberg. First, we're news in New York City. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine, Tom. President Trump and Joe Biden go head-to-head for the first time tonight in the opening presidential debate in Cleveland. The president has unwittingly done Biden a big favor. He's lowered expectations for Biden's performance. The president has spent months painting Biden as sleepy, doddering, and senile. That may have lowered the bar for Biden in the eyes of many who haven't seen him since the Democratic convention. House Democrats are making another run at a coronavirus stimulus package. They've released a scaled-back $2.2 trillion proposal to support the U.S. economy. Legislation is designed to move along talks between House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin. If those two can't agree on a deal, the House could vote on its bill this week. And more details coming out from the New York Times investigation of President Trump's taxes and income. The Times says he earned $427 million from his role on the television show The Apprentice. And the paper says the show projected the false image of a successful real estate mogul, which eventually helped him win the White House. The administration calls the Times report a political hit piece. And the Trump administration may impose more sanctions on Iran's financial system. Bloomberg's learned the U.S. may target more than a dozen banks and declare the entire sector off limits. The goal is to cut off Iran's economy from the outside world, except in limited circumstances. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Thanks so much, Ritika. Greatly appreciate that. Equities, bonds, currencies, commodities. Guess what? First time in ages, There's really not much going on. Yes, Turkish lira moments ago out to record weakness. Of course, military action in the Caucasus, that does not help, but it's more than that. It is about the fractured economy of Turkey. And other than that, Francine, I don't have much to talk about, which is frankly a relief. I guess I'd point out in honor of John Farrow, the real yield backs up to a greater negative number, not through to a new record low for the real yield, but nevertheless a negative 0.97 on the 10-year. Real yield leaves me gasping. What do you have, Francine?
Yeah, Tom, as you and I always say, if there's no real direction in the markets, that's probably a story in itself. Now, the end-of-month rebound in global equity seems to be reversing. Again, investors are assessing this scaled-back fiscal stimulus proposal in the U.S., and they're looking at the rising toll of the pandemic. So for the moment, it's directionless. A couple of things that could actually move it, I guess, is the debate tonight, the U.S. Then we're expecting Christine Lagarde to make comments, and of course, it's jobs on Friday. Here in Europe, banks and cyclical stocks are on the way down. Now, joining us to talk about the markets and politics is John Norman, who's JP Morgan head of cross-asset fundamental strategy. John, always great to speak to you. When you look at U.S. politics,
producers.
What is exactly, John, I don't know if you can hear me or if you're still speaking to our producers, but, you know, what exactly should the market be focusing on? What is the market pricing in at the moment regarding the U.S. election?
It's pricing in that there's going to be a contested election. I think it's also pricing in that whenever the victor is announced or revealed, that there's not going to be that much difference in the way the economy is going to behave and what corporate profits are going to look like. I think that's why you see a hump in volatility curves, but you haven't seen a significant markdown in asset prices in general, despite all the uncertainty. There's been some drawdown from the highs, but again, pretty modest relative to how much markets are up since March.
Okay, so how do you hedge against, you know, a very tight race? Is there something that investors will be looking at as we approach November 3rd?
I think there are a handful of hedges. If your baseline assumption is that there's going to be a contested election, one is you just recognize that this is a U.S.-specific event, and therefore that argues for underweighting U.S. assets versus other assets, so being underweight, say, U.S. equities versus non-U.S. equities. I think also any de-risking that accompanies that tends to work in favor of some of the funding currencies, whether that's yen versus the dollar or the dollar versus EM currencies. I don't think that's this hedging behavior or dynamic really should extend to, say, credit markets. Those are markets that are pretty well supported by the lack of issuance that's going to be in the pipeline over the next few months, and also by the fact that the Fed itself can change its asset purchases and buy more credit if spread markets become a bit disorderly. So you've got a narrow set of things to focus on. I think it's just about underweighting U.S. assets on a cross-market basis.
John Norman, we in the media obviously make it too simple. Your note is wonderfully complex and institutional. I'd like to ask about the correlations in the market and sort of the state of the normal market activity. Is this a normal market?
It's not a normal market. I think what is most abnormal about the market is the inability of the bond market to rally as the equity market declines. So there's been almost a 10% peak to trough decline in equities over the past month, and bond yields are almost unchanged, whether you look at 10-year bonds or 30-year bonds in the U.S. That's highly abnormal, and it's also worrisome. It means that any investors who are holding fixed income to hedge their equity risk can't count on those bonds as giving them the capital gains when equities are declining. That's
John, I don't want to get you in trouble with JP Morgan General Counsel, but I would suggest that Mr. Dalio and Prince over at Bridgewater are suggesting you can have hedge or anchor alternatives to full faith and credit paper. Not to talk about Bridgewater, but do you suggest that if bonds aren't acting normal, we can find alternatives to use as derivative hedges?
There are absolutely alternatives. The issue is whether or not those alternatives are going to behave as consistently as treasuries have in the past. So the alternatives are owning yen versus other currencies, dollar versus emerging markets, gold versus dollars. But the problem is that those hedges do not behave as sort of reflexively as the bond market used to behave when the equity market declined. So by all means, you need to hold the alternatives. You probably need to hold all of them to kind of control for the fact that each of these is imperfect. But the fact that they're not as reliable as the treasury market used to be means that the hedge protection available is less than it was in the past, and that is problematic. It suggests maybe clients should hold less risk than they might normally have because they can't really insure against bad outcomes.
So, John, is there anything else that you can ensure against bad outcomes with?
There are a couple things. They're untested, but I think they're worth considering. One is holding high-grade credit. The other is holding EM local currency debt on an FX hedge basis. The whole idea of this is that central banks are behaving differently from this crisis than they did in the past. The Fed is buying credit in a way that it never did before. EM central banks cut rates in a crisis in the way they didn't do before. That means you could actually have more stability in those markets. You might even get capital gains in EM local currency bonds on an FX hedge basis, which makes them useful diversifiers in a way they haven't been historically. So there are other things to consider.
John, I mean, talking about, I guess, things that could go wrong that the market hasn't priced in. We heard from, the ECB regulator for the banks, Mr. Enria, saying that the market is not fully, is not pricing at all, actually, at the moment, a no-deal Brexit. How would you play that at the moment?
To me, if you believe that no-deal Brexit should be the base case, you should be short sterling. I realize that's not a novel concept for anyone when you look at the depressed level of the currency and you recognize that clients are also underweight this currency. But I do think the kind of economic disruption you would get from a no-deal Brexit, because of what it would motivate from the Bank of England, possibly negative interest rates and more QE, means the obvious hedge is the right one that's being underweight the currency.
With this hedge uncertainty, can you affect trades? Can you affect a tactical strategy?
I hope so. That's what I try to do for a living. But I think the idea here is that, you should expect maybe a lower success rate on these things than you have in the past, because some of the fundamental relationships are under threat because of a low yield environment. So I do still very much believe you can do it. I just think people need to be a little less ambitious in what they expect to realize from a lot of these recommendations.
I hope everybody understands in the early darkness of a full moon New York City, it is a joy to have such a direct conversation with Mr. Norman of JP Morgan. If he's kind, we'll probably have him for our next section, unless he stands up and leaves the Norman Library. Francine, John Norman of JP Morgan, and we're going to continue here as best we can. Futures -3, Dow futures -23. As we begin to look at the American economy and the millions unemployed, Jason Furman, he's formerly with the Council of Economic Advisors, of course, at Harvard. Jason Furman, the 1 o'clock hour. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
The impact of the pandemic is still being felt across the euro area. People are losing jobs, people are losing income, businesses are facing difficulties, and prospects about the future remains uncertain. Annual headline inflation in the euro area stood at minus 0.2% in August and is expected to remain negative in the coming months. Clearly, we are far away from the goal that we have, which is close to but below 2%, and we are not complacent about it. Euro area real GDP is only expected to recover to pre-crisis levels in late 2022. While euro area economic activity rebounded in the third quarter, the recovery remains incomplete, uncertain, and uneven.
Well, that was ECB President Christine Lagarde addressing European lawmakers on Monday. Still with us is John Norman, JP Morgan, head of cross-asset fundamental strategy. John, how much more does Europe at this point have to do, both on the fiscal side and on the monetary side? And do we start worrying about debt levels? Or is that just, you know, as long as it's issued by an EU country, it just shouldn't factor as a concern?
Well, I think what Europe has to do is what most developed markets have to do. They need to run easy fiscal policy for the next couple of years and allow central banks to finance that at historically low rates. And that might sound like a very simple concept, but that's not really the way current legislation is structured in most of these countries. Most of these countries have fiscal stimulus rolling off over the next year, so it's a de facto tightening. So there is quite a lot for the fiscal authorities to do. I think central bank policy is willing and able to suppress rates and push out sovereign indebtedness concerns for quite a while. But unfortunately, the fiscal side of things on current legislation is not going to be helpful for growth over the next year.
What kind of asset class do you like in Europe, if any?
Well, I like equities in the sense that I think even as the economy slows, even though there's some fiscal risks, you're still going to have an expansion, which is maybe trend at worst. And I think the bar is so low for equities to outperform fixed income in a low interest rate environment that equities are the one that you should favor. It's just that I have low expectations for how this is going to evolve as kind of a high quality trade. I think if you have recurring doubts around the pace of growth, if you have the possibility of an accidental fiscal tightening, you're going to have drawdowns along the way. So it's not a sort of low risk outlook for stocks, even though you have an incredibly low hurdle rate to beat bonds.
Do you have a confidence, John Norman, that managements can be subtle enough to adapt and adjust to all this? Do they have enough degrees of freedom to take the income statement and fix it to an adjusted world?
I think many companies do. I think you've seen an incredible amount of sort of opportunistic issuance, for instance, around the COVID crisis. I think you've seen companies manage an unbelievably challenging operational environment. Obviously, you have many companies which have not managed that process, and that's why you've seen an increase in bankruptcies and defaults. But relative to the size of the shock that's been imposed on these economies and the completely unprecedented nature of it, I think the fact that defaults have been so low is some testament to partly agility, but partly the easier financing environment that makes it easier to retool operationally and not have to worry about funding stress over that period too.
John Norman, it's idiosyncratic. It's a Turkish lira and it unwinds. When a currency weakens like that and on a logarithmic y-axis gets curvilinear, there's convexity, there's acceleration to the decline. Is there a way that you can tell the when it unravels?
Well, I think it's happening in the sense that this is a consistent underperformer relative to all other currencies, even when the dollar is moving lower versus a number of other pairs. So the fact that the lira is consistently weak tells you there's some idiosyncratic crisis of confidence in the way that policy is being managed broadly. I think I would only feel more comfortable with that currency if Turkey were pursuing a higher rate environment over a sustained period. I don't think the initial rate hikes are enough to stabilize the currency because there's this misgiving, I think, that investors have that those high rates may not be maintained for a long time. So there's only going to be stability, I think, over a multi-month period of high rates. It's not going to come in the first instance.
Will that, John, how much of a possibility actually is that? Is that almost non-existent given the current political situation, or could it, surprise us and maybe even come sooner than expected?
I don't think it's out of the realm of the possibilities. The central bank has raised rates before at times of extreme lira weakness. So both some of these hikes that occurred a couple of years ago were timed in a way that was a surprise, and those rates were maintained at a high level for much longer than most people would have expected. Eventually, there was a turn in the currency. So I think there is a precedent for tight monetary policy stabilizing the currency. But again, it's a waiting game, and I don't think investors are willing to invest in this market now. They probably want to see 2 or 3 months of high rates.
John, I've lost so much money betting on the Tottenham Spurs in the last 6 weeks. Where's a trade now to help me recover? What's your single best idea across these asset classes?
I think if your horizon is the next couple of months, you have to own credit. I think this is going to be the most stable asset class in a very uncertain environment, and I think part of that is going to come from the belief in a central bank backstop. I think this is going to be the surprise in terms of something that's quite stable when vol is high in other markets.
Thank you, John Norman. Just brilliant. Just greatly appreciate your attendance. He is with J.P. Morgan. Futures -6, Dow futures -47. Again, I want to look at Turkish lira out to a 785. Right now, 784. There's some real convexity there. That is a difficult story. This will be really interesting. After interviews of the last number of days on his book, Rage, and of course the impact of the book on Washington, we will address with Mr. Woodward not the rage of the moment, but consider on this day of a debate the history and the similarities and differences of the president and a Nixon of another time. Bob Woodward this morning in the 8:30 hour. This is Bloomberg. Good morning.
Everything around us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Particularly, sort of the technology landscape has gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Live coverage of the first presidential debate begins Tuesday night at 8:30 p.m. Eastern Time on Bloomberg Television and on Bloomberg Radio.
This is Bloomberg Surveillance. I'm Rishka Gupta with the Bloomberg Business Flash. It's the biggest tender offer in history for a Japanese company. Nippon Telegraph and Telephone plans to turn its wireless unit NTT Docomo into a wholly owned subsidiary. The company will spend $40 billion to buy the shares it doesn't own. That represents a 40% premium. It's a move that may help Prime Minister Yoshihide Suga's push to lower phone bills. And Uber is considering whether to buy a ride-hailing joint venture between BMW and Daimler. That could give Uber a boost in market share in Europe and Latin America. Bloomberg's learned that there have been early-stage talks. The challenging market could make it difficult to agree on a price. And LVMH has countersued Tiffany weeks after pulling out of its planned $16 billion purchase of the jeweler. The luxury goods maker says its decision was driven by the French government's request to delay the deal's closing. LVMH also accused Tiffany of mismanagement during the pandemic. In January, a trial is set in Delaware to determine whether LVMH must go through with the deal. And that's the latest Bloomberg Business Flash. Tom Francine.
Redika, thanks so much. Equities, bonds, currencies, commodities, it matters even when it's a slower day, and it is. It's a nice change, frankly. Futures -6, Dow futures -52, and the VIX, I'm going to call it a churn at a 26.85 on the VIX. 10-year yield, it's in a little bit, but it's a trading range, as John Norman was suggesting to us, 0.65%. Francine, I'm adding no value. Save me.
Okay, the pounds. Let's focus on the pound, because there is a bit of a story on the pound. The pound adding to gains amid speculation that a successful Brexit trade talk could actually help shield Britain from a messy rupture with the EU. So we're seeing that rise a little bit on, renewed hope that they will get a deal done. I'm looking at European shares are down, and that is led by cyclical stocks, but also banks. I think, people are trying to assess a scaled back fiscal stimulus proposal in the U.S. as well. Speaking of the U.S., we look at the debate tonight. Coming up next, we speak with Amy Pope, Chatham House Associate Fellow of the U.S. and the Americas Program. We'll look at Biden versus Trump. We'll also look, Tom, at exactly some of the things that we've learned. I mean, there's so much news, right? We look at the Supreme Court appointment. We look at whether that goes through the Senate. We look at the tax story by the New York Times and whether that plays out in the debate. And, just in general, these debates could really sway, right, Tom?
Yeah, absolutely. Somehow I think the tax issue will come up.
Me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos.
Y estábamos viviendo en dos casas, en una 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas.
Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración.
Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esa enfermedad yo perdí todo, perdí mi trabajo.
Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Good morning, everyone. Bloomberg Surveillance, and it is a debate, and it is in Cleveland, Ohio. We're going to give you some framework on there. Right now is David Weston and Kevin Cirilli will give you perspective. Tonight, Cleveland, Ohio is exceptionally important to the fabric of late 19th century America. It was arguably the richest city in the world off of oil in the times of the 1890s and the 1900s. Case Western Reserve University, a leading institution. Think the legacy of John Hay and also of Mr. Dow of Dow Chemical and all of that industrial might of another time. It would be important for us in this debate to go find a political expert. Better than that, we drag in a gentle lady from Case Western University in Cleveland, Ohio, one A. Pope of Chatham House in London. Your father went to Case Western Reserve. The symbolism to me, Amy, is extraordinary. This is one of our great science institutions, and there will be Mr. Trump talking in this nexus of research and engineering.
That's right. I mean, this is going to be a big show, and who knows which version of the president we're going to see tonight. There will be a lot of fireworks is what I'm expecting.
There is an agenda. We all know that Chris Wallace knows what he's doing over at Fox. He's always been very rigorous about the debate. Do you assume it will stay on script, or does Mr. Biden open up talking about this month's number, 750?
I think the vice president is going to go right for the tax issue early on and very, very often. And the fact that the debate is taking place in Cleveland is particularly useful for that point. Well, Cleveland is really sort of blue-collar America. It's where we've seen the face of the Democratic Party really shift. Biden is going to want to hit very hard on the fact that President Trump has paid less in taxes than most Americans, than most of your teachers, your professors, your workers in various industries. So that is where he's going to hit hard, pushing forward the idea that President Trump actually knows nothing about how middle-class America lives.
The problem, Amy, or not the problem, but we have seen a spin towards a lot of people from the President Trump's support in saying, well, if I don't have to pay taxes, why would I? I'd be stupid to pay more taxes than I have to. Will that sway his base at all? Does it actually move the needle?
I don't think that this information moves the needle for his base. His base loves him no matter what. And I think he was right when he said he basically could do anything and he would still have this core group of voters. So I don't expect it to move their votes. But really, everyone is now fighting for the votes in the middle. The folks in places like Cleveland and Pittsburgh who voted for President Trump when in the past they'd voted for President Obama. So that is the particular demographic that they're both going after right now. And it's not clear yet how the tax issue is going to weigh in their minds.
What will make a difference, Amy? Does anything else, does a Supreme Court justice, I mean, who are they trying to talk to in this debate? Is it the people that are undecided, or is it people that they could actually turn?
It's the people who are undecided, I believe. I don't think the Supreme Court is an issue that is going to weigh heavily in the minds of that particular category of voters. Whether they're following the Supreme Court is not clear. And I think that President Trump is going to use that as an issue to get his base really galvanized and show that he can deliver for them. Whereas Vice President Biden doesn't want to spend too much time on the Supreme Court and wants to keep the issues really focused on things like the economy and responding to COVID.
Amy, my reading is, and this of course comes from our wonderful Kevin Cirilli, is the idea of Pennsylvania and Florida as being the key states. But what it comes down to is the Shaker Heights vote, that prosperous territory of Cleveland, Ohio. How will Shaker Heights and the other Shaker Heights of America, how will they look at this debate tonight to make a choice of Biden or Trump?
I mean, the interesting thing about the tax returns is that it actually suggests that President Trump's plans for the economy are really to be questioned. If he can't manage his own finances, if he's built effectively a house of cards that could come tumbling down at any point, what confidence should the American people have in his ability to deliver a strong economy at a moment when the country is really in crisis? And so that's going to really be the focal point of the debate. What is his plan in the face of COVID? If there's not a vaccine that can be distributed in January, how will the economy continue? How will supply chains work? That's going to matter to a number of voters.
Well, what is the weighting, Amy, of the first impression of this first debate versus debate 2 and debate 3 if we have so many people voting early? Is this a sort of a winner-take-all first debate?
I wouldn't say that. I mean, I think we still expect that the debates will matter to those who are really in the middle, who are really trying to figure out how the candidates are different. And frankly, to me, that's surprising that there are any of those folks left, but we know that there are. I would expect that they're going to take them all under consideration. On the other hand, you know, early voting is a new dynamic, and we're not really sure how this is going to play out. We've never been in a situation where so many states are offering the opportunity for voters to get out there and basically vote now for the president.
So, Amy, give us a sense. I think about 1 million people have cast their vote already. You know, how does that actually change the dynamics in these swing states? Do we have a more deep dive of who's voted and who hasn't?
Well, the projections suggest that it's going to be more Biden voters who are voting through mail-in voting. And that is creating this dynamic that so many people are worrying about. Then on the day of election, when you have people going to the polls and when you have the polling that's being done when people are exiting the polls, it will look like President Trump has won. But we won't actually know the full picture until we've been able to calculate all of the votes. And so that's the interesting dynamic here, is that the projections again show that it will more likely be the red states who are voting in person at the polls, and the early voters are more likely to be Democrats.
I mean, is this just simply, you know, people deciding whether Donald Trump has done a good job in the last 4 years or not? I mean, this feels like a very different debate from what we saw between Hillary Clinton and, of course, Donald Trump last time round. And if so, is he going to be judged on COVID? Is he going to be judged on the economy or something else?
I do think this is first and foremost a referendum on Donald Trump. As we all know, it's usually the incumbent who has the strongest chance of winning re-election. This is a very unusual election because the scale of the crisis of COVID, the impact on the economy, is nothing that anybody really appreciated going into this year. And so I really believe that this is going to be a referendum on Donald Trump's response to COVID and the confidence of Americans as to whether or not he can keep the economy back on track, whether he can inject some sense of security into the lives of ordinary Americans who right now their lives have been completely disrupted. And so does he have the solution? And I think that's what voters are going to be weighing in on.
Amy, where do the culture wars fit in? I mean, Twitter lights up nonstop with the back and forth of the culture wars, Facebook as well, and the rest of it. Is that part of the landscape, or is that just a distraction?
I think that's a distraction that Donald Trump is very anxious to deploy here. We see him really pushing hard on things like the protests and the violence in various cities. We know that he wants to make that an issue. We know he wants to make immigration an issue. He really wants to draw people into the culture wars. And it's not that it's not working. Certainly that galvanizes his base. The question is whether that works, again, with this key constituency that we're all focused on, those who haven't decided, those who are not wed to one party or another, and who are really looking at how the political issues impact their daily life.
Oh, for Cleveland, Amy, what do you think here? Do you think pierogies or Polish boy? I mean, if these guys come into Cleveland here, what do they need to do to be sure they understand the true fabric of Cleveland?
I don't know. I spent a lot of time in Pittsburgh, and that's where I got to know my pierogies. But Cleveland is really, I mean, to me, it's a microcosm of America. You have real working class people there. You have people who are thinking about, how do I pay my bills? They are often a paycheck away from real financial pressures. And so I think that's what the president really needs to focus on. What solution does he have for them? Can he continue to persuade them that he's going to offer a new vision for the United States, or are they going to be disappointed by what they've seen so far?
With your knowledge of Cleveland, Amy, this has been really special. Thank you so much. Amy Pope from Cleveland and Chatterbox this morning, of course, from London. Our coverage tonight, the first presidential debate at 8:30. We'll kick that off. 9 a.m. Yeah, a lot of people have said, am I taking the surveillance beauty rest? This is so important. I think I will be up for this debate just to see it. It's truly an historic moment. With our first word news in New York City is Ritika Gupta.
Thanks, Tom. The global death toll from the coronavirus has now climbed over 1 million, but a researcher at the University of Melbourne says actual fatalities could be almost double that. He says the virus's ability to transmit in people who show no sign of the disease have enabled it to outrun measures to accurately quantify cases. A wildfire in Northern California's wine country is now more than tripled in size. The blaze has forced thousands of evacuations and is threatening properties in a region devastated by fires just 3 years ago. The fire is located north of San Francisco. It's burned more than 36,000 acres. The UK could be facing a substantial tax increase because of the coronavirus. That's according to the Institute for Fiscal Studies. The influential research group says it's highly plausible that government spending will make up about 45% of GDP by the middle of the decade. It hasn't been that high since the 70s. And in hockey, the Tampa Bay Lightning won its second Stanley Cup last night. The Lightning beat the Dallas Stars 2-1 to win the best-of-7 series 4-2. Tampa Bay defenseman Victor Hedman was named the most valuable player of the playoffs. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine Tom.
Ritika, you absolutely nailed that on hockey. Victor Hedman, exceptionally well-deserved. He is just, Francine, incredibly gifted on defense.
Yeah, Tom, really our resident expert when it comes to ice hockey. And Tom, you need to show us some moves one day. So I'm looking forward to actually
well, they're a little bit slower than they used to be.
I don't believe that, Tom, not 1 second. Up next, we track COVID-19 with Jennifer Rohn, UCL Principal Research Fellow. This is Bloomberg.
Everything around us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
The day the vaccine is approved by the FDA, we'll begin distributing it within 24 hours with hundreds of millions of doses to follow very quickly. We're all set to go. We're all ready, and logistically, we have the military lined up, and some incredible people are just waiting to have it. Over 100 million doses will be available before the end of the year.
The president speaking on this pandemic yesterday, and of course in the last 48 hours, a little bit of a debate between Dr. Redfield of the CDC and the president over the path taken. What is most certain is the pros are looking at the ratios. Yes, they're looking at deaths, and simplistically they're looking at cases, but far, far more the pros do what's called a compare and contrast. Jennifer Rohn is expert at this. She's at UCL in London, a principal research fellow. Jennifer, the infection rate gets my attention. Governor Cuomo yesterday in New York showing stunning infection rates for Brooklyn and Queens to the east of Manhattan. Tell our audience the dynamics of the various infection rates right now.
Well, what we're seeing, first of all, is that we passed a terrible milestone of deaths, but as far as cases, they keep going up, and there's really no sign of sort of an average stopping. The infection is rolling on, and what we're seeing is places that before had got control of their curves, they're starting to come back. So this is happening in the States, it's happening in the UK, it's happening in Europe. Countries are losing control of the virus again after having got it under control, and this is what we predicted would happen, but it's quite sobering to watch it happen in real time.
Peter Hotez was with us yesterday from Baylor, and he emphasized as the season changes, we will go inside. What are your thoughts on how the seasonal change will be for this pandemic?
Well, of course, it's a new virus, so we don't know for sure, but it has to be said that almost every respiratory virus comes into its own in the wintertime. Not only are people indoors more, but there's something about the cold air that respiratory viruses thrive on. So yes, I'm not looking forward to the winter. And also there'll be circulating seasonal flu, sort of adding that perfect storm element. So we've got indoor people breathing indoor air, we've got the cold, which the virus likes, and we've got this co-circulating seasonal flu that could really throw a spanner into the works.
Jennifer, is COVID less deadly this time around, either because we have a better handle on how to minimize the risks in certain patients when they're in hospital, or because the more vulnerable are staying home?
Well, it's a bit complicated. It's not really less deadly. It's just we perceive it to be less deadly because back in the day, in the spring, when it was really taking off, we were only testing people who were sick, and it appeared that 1% of people were dying. But we know now that was just the tip of the iceberg. Many people were infected, and we only knew about a few of them, and those were the sick people. So the actual fatality rates are lower than we thought in the general public. So it isn't changing. It's just that we understand the distribution of the virus better. Having said that, we do have a few tricks up our sleeves now. Doctors are familiar with the disease. They know how to treat it. We've got a few drugs that make a little bit of a difference. So it hasn't changed. It's the same old COVID that's killed a million people, but we are a little bit better dealing with it.
Do we know how many people, how much percentage of a population have actually had COVID? Is it 17, 20% in London? And is that different from New York? And are those people protected?
It depends on how much surveillance is going on. I mean, apparently there are countries where the herd immunity may have been reached. There's other places where it's only 20%. It really depends on the population density and how it's played out thus far. I would say that we are very far away from global herd immunity, and most places we're nowhere near it.
Jennifer, tell me your thoughts on the school dynamic. I mean, there's just so much, not so much misinformation, but different distinct threads of information that are out there. How do you perceive the debate over our elementary, our middle, and our high school attendance?
Well, there's no question that it's very safe for kids to go back to school. The chances of coronavirus killing a child is vanishingly small. But the problem we have, of course, is that kids are not hermetically sealed away from the rest of the population. Many kids are looked after by grandparents. And of course, once you get circulating in kids, it's going to spread to older populations. And we have seen that. So I think what we're looking at now is the trade-off. We cannot not educate our kids. So we have to send them back to school. And really, I think it's very difficult to prevent infection in that group. But the best we can do is just keep up with the shielding of those who are more vulnerable.
Jennifer, the press number in the United States is 200,000. We've just passed this tragic milestone of death. I haven't heard anyone really frame where this glide path is going. Is it just linear, I mean exponential rather, and you just trend it out forward, or is there a way that it stops or it peters out?
I don't think anything's going to peter out until we have a vaccine or we have herd immunity. So you can extrapolate how many people will die based on the case fatality rate. This is a number that's known. In old people, it's a very high number. In young people, it's a very small number. As cases go up, deaths will follow. It may take a bit of a lag because if you're circulating in the younger population, it takes a while for that to trickle down to older people, but it will happen. It's inevitable. We're seeing it in many countries now, that the cases have been rising without deaths rising, but now that's starting to change. We're getting that uptick that signals that death is following. So as long as cases are going up and we have no vaccine, this is, I'm afraid, inevitable.
Jennifer, frankly, it's so confusing if you're sitting in New York or London, you know, because there are so many different guidelines that vary, frankly, from region to region. I mean, here it's different if you live in Scotland than it is if you are in England. I mean, how should people get their information? You know, what's safe and what's not? Of course, follow government guidelines. But as we get into the winter season, should people just be much more cautious, and even what some of the governments are saying?
I think what we're seeing is an attempt to experiment with the population. Really, we've never been in this situation before. We know how to shut down this infection, this pandemic, and that is by total lockdown. And nobody wants to go back to that. So what we've been seeing now is various governments, various cities trying to implement smaller breaks and to see which ones work. The experiment is flawed because it takes 2 or 3 weeks to work out what you've done, if that's actually done anything. So yes, you have to follow the government guidelines, but those do vary widely. And I think personally, if you're feeling vulnerable, you should take more precautions. The government has not shut down. For example, in the UK, you can stay out till 10 o'clock at the pub if you want to. Maybe you personally don't want to do that.
No, but John Farrow does. Jennifer Roan, thank you so much with UCL. Greatly appreciated. And of course, the backdrop here is attendance in New York City today. I'm going to say limited attendance of elementary students. The little kids, maybe in New York City, go back to school unbelievably this near final day of September. Coming up on the American labor economy, Julia Coronado in the 8 o'clock hour. This is Bloomberg. Good morning.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
Are people afraid of calling you because their own credit ratings might go down if it's known that they have to borrow money from the IMF?
If you're a president of a country in trouble, you better call.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. Cybersecurity software firm McAfee has filed for an IPO. It's part of a software boom in listings this year. It used to be a unit of Intel. In 2016, Intel sold a majority of the company to TPG in a deal that valued it at $4.2 billion. Tesla will dig its own lithium in Nevada to use for batteries. Bloomberg's learned that the electric car company has dropped a plan to buy a mining company. Tesla CEO Elon Musk has said the company has mining rights to more than 10,000 acres in Nevada. And thousands of workers in JP Morgan's consumer unit can work from home a little longer. They've been told they don't have to come back to the office till next year. That's a contrast with JP Morgan's Wall Street operations. The bank's senior traders have been ordered to come in to work. And that's the latest Bloomberg Business Flash. Tom Francine.
Vertica, thank you so much. Now, this is what the market is looking at. Now, we're definitely range-bound, and I know Tom keeps on saying that there's not much going on with the market. I don't disagree. There is maybe worth noting a bit of strength on pound 116.96. It does seem that people are now thinking that we could have a deal when it comes to Brexit. And in general, we have global equities, the rebound that we saw in the last trading sessions fading as investors looking at a fiscal stimulus proposal in the U.S., which has been scaled back, and the number of infections rising because of COVID-19, Tom.
Francine, the 10-year tip, this is the real yield, if you will, negative 0.97. It was negative 1.02 and then has done better over the last number of days, up about 10 basis points, and it comes more than halfway back now, negative 0.9720 as well. On the equity markets, on your participation, Howard Ward will join us from Gabelli Funds. We do that next. This is Bloomberg.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table,
resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
There is no change in policy, but there is a lot to unpack in this Fed statement.
My sense is that more fiscal support is likely to be needed.
You saw definite signs of slowing. Do you still see that?
The amount of pain we're going to have in the economy and the challenges we face to get to a full, robust recovery are just going to be much greater.
This morning, all prepare for Tuesday Night Football at 9 p.m., a debate. The president does, quote, limited preparation. Mr. Biden measures the distance from, quote, Scranton to Park Avenue. Negotiation and compromise all of a sudden in the air. Pelosi and Mnuchin, they will speak this morning. There are 35 days to the election. How many to stimulus? And there is a jobs report Friday. Many millions are unemployed. Good morning, everyone. Bloomberg Surveillance from New York, from Cleveland, and of course, Bloomberg Surveillance from London with Francine Lacroix. Francine, I'm not sure if it's this hour or next hour, but the Prime Minister is going to manage the message forward. Give us an update on a nation listening to the Prime Minister on this horrific change in the pandemic.
Yeah, Tom, so there's a couple of things. First of all, we're expecting to be briefed by the Prime Minister. This could be a weekly occurrence on some extra steps being put in place to make sure that everyone's safeguarded and as safe as possible. But again, there are different rules in England if you're in Scotland, if you're in Wales. And so a lot of people are saying, well, it's confusing. You know, do I not catch the virus if I'm in the pub at 9 p.m., but I catch it at 10 p.m., which we saw with the restrictions last week? The bigger thing is that there's now a rebellion inside the Tory party, Tom, about, you know, some of the extra, you know, things put in place and the fact that the Prime Minister is amassing too much power. But really, the only show in town is the U.S. debates. And I think a lot of Londoners will also stay up or go to bed and wake up at 1:30 a.m. to watch that.
Lacroix ruining the beauty rest at 2 a.m. this morning as she will gaze at the debate. Kevin Cirilli with us here in a moment. Right now, your first word news in New York City is Ritika Gupta.
Thanks, Tom. President Trump and Joe Biden will go head-to-head for the first time tonight in the opening presidential debate in Cleveland. The president has unwittingly done Biden a big favor. He's lowered expectations for Biden's performance. The president has spent months painting Biden as sleepy, doddering, and senile. That may have lowered the bar for Biden in the eyes of many who haven't seen him since the Democratic convention. And House Democrats are making another run at a coronavirus stimulus package. They've released a scaled-back $2.2 trillion proposal to support the U.S. economy. The legislation is designed to move along talks between House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin. If those two can't agree on a deal, the House could vote on its bill this week. More details coming out from the New York Times investigation of President Trump's taxes and income. The Times says he earned $427 million from his role on the television show The Apprentice. And the paper says the show projected the false image of a successful real estate mogul, which eventually helped him win the White House. The administration calls the Times report a political hit piece. And the Trump administration may impose more sanctions on Iran's financial system. Bloomberg's learned the U.S. may target more than a dozen banks and declare the entire sector off limits. The goal is to cut off Iran's economy from the outside world, except in limited circumstances. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom Francine.
Ritika, thank you so much. Let me do the data here real quick. It is a quiet day today. Futures -4, bonds not giving us much yields, 0.6495% on the 10-year yield. The VIX 26.78, dollar a little bit weaker. We're watching Turkish lira, which moves out to new record weakness, of course, off military affairs in the Levant. Francine?
Yeah, Tom, I'm looking at pound. It's not moving by much, but it is gaining a touch, strengthening a touch. European shares are down, led by banks and other cyclical stocks. I think, maybe some of the market participants are just taking a bit of breath, given that the global death toll from the pandemic exceeded 1 million. Investors are also pinning hopes on this $2.2 trillion stimulus proposal by the Democrats. So if you look at, the volatility, it's probably what we'll see into the first presidential debate, and then we'll see what happens tomorrow morning when we wake up, Tom.
Well, it is very simple. It was 1960 in a debate of John Kennedy and Richard Nixon, many people drawing parallels to this important debate in Cleveland at the Case Western Reserve University. Joining us now are Kevin Cirilli at the debate today. Kevin, first question. This came up twice yesterday. Why is the president having, quote, limited preparation?
He's going to wing it. I mean, look, I was speaking with sources last night, Tom, just regarding the president's debate strategy. And if you look back traditionally to the incumbent presidents, they typically do struggle in their first debate. But both sides, President Trump as well as nominee Biden, really lowering the expectations. We head into this debate with the president outperforming amongst Hispanics, given his 2016 levels, as well as amongst white working class voters. In contrast to that, nominee Biden is outperforming in white suburban women. He is also outperforming amongst African Americans, comparatively speaking, to Hillary Clinton's performance in 2016. He has been able to manage a lead significantly single digits above what Hillary Clinton was polling at this particular point in the cycle.
I looked at the vectors of the national polling, and I guess, Kevin, I sort of tossed them aside to look at state polling. You're encyclopedic on this. Tell us about Ohio as a battleground state.
Well, here where we are in Cleveland, this is the part of the all-important battleground state of Ohio, which has traditionally been going more in a Republican electoral direction over the past several cycles. But this is where Joe Biden needs to pick up votes. If you look at the Catholic vote, for example, a heavy Catholic constituency here in Cleveland, he is beating Donald Trump amongst Catholics by a single-digit percentage points. That becomes important when one of the things that will be discussed at this debate, the nomination of Judge Amy Coney Barrett to the Supreme Court, a Catholic conservative, will likely come up. So there's many different battles that are being waged that are going to erupt here tonight at the first debate. And I also just want to note the volatility that has been baked into this election, because investors now preparing not just for a November prolonged political battle, but one that might last even into December as a result of that Supreme Court fight and as a result of that fiscal stimulus fight that is also happening in the background of the elections.
So, Kevin, is Ohio still a swing state? If you look at, what happened in 2016, I think President Trump won by 8 points. Is it now, more solidly Republican? Are there new swing states?
Well, there are some new swing states. I think Ohio is still something that Democrats don't want to count off, and that they would be able to pick it up. They still want to do so. You look at a state like Arizona, where Democrats have been incredibly competitive in, and actually some polls have Biden beating Trump in a battleground state of Arizona. I'm also watching carefully Florida. Florida has increasingly become much closer than I think Republicans would have liked to have seen. If you look at the Hispanic vote in Florida, particularly amongst Cuban Americans. That's another constituency that both campaigns are carefully monitoring. Pennsylvania, where the Biden campaign is headquartered, in Philadelphia, a state that is crucial to Democrats and to Biden's coalition that he's trying to put together as well.
Kevin, I think the moderator had to select 6 topics that were announced by the Commission on Presidential Debates last week, and I read them out as the records of Trump and Biden, Supreme Court, COVID-19, the economy, race and violence, and the integrity of the election. What will be most contentious?
All of them. I mean, if you take your pick. But Chris Wallace is someone who has a reputation for preparing meticulously for these types of debates. He had a debate last cycle that garnered him wide praise. Look, I think in terms of the format, 90 minutes uninterrupted, this is an opportunity for both sides to really make their case. But it's also, I think, more importantly, Joe Biden has to prove that he can handle the marathon that is a presidential debate, and President Trump has to defend how he has handled COVID. Both are the two bars for each of those candidates.
Kevin Cirilli, to be polite, debate to debate, the moderating is uneven. There is huge acclaim for Chris Wallace. What will you look for from Mr. Wallace tonight to stay control of the storyline?
2 things. First and foremost, that he isn't the story, and he has a reputation of really holding whomever he is interviewing to task, and that the voter, those 10 to 20,000 undecided voters in these battleground states, are able to understand precisely the vision and the policy that a President Biden or a second-term President Trump would enact. And then secondly, that the political theater and the political noise don't overshadow the importance of an American tradition in the United States, and one that dates back for decades, as you pointed out, Tom, and is crucial to the election process. All the pundits are saying debates don't matter. They still matter because there are undecided voters, and it's a test of an American democracy in order to see how these two nominees, which direction they want to take the country in.
I mean, I'm looking, Kevin, here. You're in Cleveland. I'll be taking the surveillance nap so I can stay up for the Cirilli show. I know you're going to head over to the Rock and Roll Hall of Fame and look at 2020 inductees, the Doobie Brothers, as well. I mean, it's good to be in Cleveland and check out the Rock and Roll Hall of Fame, right?
Well, it's good to be in Cleveland because I think it's back on the trail. I mean, and even just driving around and you see the yard signs. I was on the famous East 4th Street last night, and so much of Cleveland shut down as a result of the pandemic. But talking to some of the locals, and they have a much different perception of this race than, quite honestly, what I hear inside of the Beltway and with my friends up in New York. And that's why this is so incredibly important. Right. And I just want to note, they're both coming with their entourages. President Trump's going to be traveling with Senator Marsha Blackburn and Tom Cotton, which I think just underscores the importance of that Supreme Court pick, as well as he's going to defend on a national security front as well against the attacks that are going to come his way. I want to get that in there.
Thank you. Got that in, Kevin. It just slipped into my puny brain. The Doobie Brothers, Kevin, China Grove. A-Bar Court.
I don't even know who the Doobie Brothers are.
It's just sick.
I don't know who the Doobie Brothers are.
That's just terrible.
I'm sorry.
Have a long day, Kevin Cirilli.
I'm going to Google.
Looking forward to your work tonight here, this truly historic moment at Case Western Reserve. We've got much, much more to talk about here. Of course, the coverage tonight at 8:30. David Weston leading our coverage. I know he's really interested here in the back and forth of the first 10 minutes of that debate. Stay with us. Red and green on the screen. From London, from New York, this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Good morning, everyone. Bloomberg Surveillance. Francine Lacroix, listening to the Doobie Brothers in London. I'm Tom Keene in New York, and joining us now, Howard Ward of Gabelli Funds, of course, talking about any number of topics on the equity markets. Howard, are you long equities, and can you buy at the margin this morning?
Well, Tom, obviously we are long equities. We're not market timers. We're in a bull market. But having said that, this is a bull market that's under some pressure. We've been down on the S&P for the last 4 weeks, even though Friday and yesterday were strong days in the market. At 2021 times next year's expected earnings, I think I'd be more comfortable adding to stocks here if we had another 5% down in the market. And so we came down 10. I'd rather be down 15. I'd clear the decks, let some more of the hot air out of this market before feeling better, especially leading up to the election and with all of the uncertainty regarding the economy.
Howard, it's not about punditry at Gabelli. It's about quality research of these managements. Tell us the mood you see among managers to adapt and adjust to the mysteries forward.
Well, the stock market and the companies, it's very much like the haves and the have-nots that we've read about in the paper. You know, a number of companies, particularly on the growth side where I'm involved, have actually benefited from the COVID shutdown. Lots of information technology stocks, some med tech stocks, some financial tech stocks, some e-commerce type stocks like Amazon. This has been a big boon to them, remarkably. On the other hand, if you are in the airline business, the hospitality business, bars, restaurants, you're hurting. And even, the nation's hospital system is suffering daily cash bleeding of unprecedented proportions. So it's the haves and it's the have-nots. The haves have become expensive stocks. The have-nots, not so expensive, but the certainty that a lot of people would like to have to invest in those stocks right now is missing. There is no vaccine. Yeah, we'll probably have something to show for that over the next 6 months, but it's uncertain. The average vaccine is a 10-year process. The fiscal aid, which was so important as a pillar of strength for getting this rebound going, that's evaporating. And unless we get another deal, a lot of these bars and restaurants and hotels, small businesses are going to be going out of business. So we've had a V rebound so far, and I think that V rebound is going to be challenged now for the balance of this year, especially without any additional fiscal aid. Now, I know that they're working on something in Washington. My guess is the stock market will go down enough at some point in the next month to get a deal done.
Howard, what is the market pricing in terms of stimulus, and what's it pricing in terms of election?
First of all, on the election, I don't think the market's pricing in, it doesn't seem to care. So we've calculated that, from the stock market standpoint, the market's looking at earnings, corporate earnings, I think more than anything. The Biden tax plan will reduce earnings by about 7%. Call it one multiple turn, so it's not really a game changer. You'd be at, let's say, 21 times earnings instead of 20. Certainly, high-income individuals would feel differently about that. They might say it's a game changer, but for the stock market overall, I don't think it is. And so amazingly, I just can't really see the stock market having discounted a lot. Certainly a basket of Biden stocks has maybe done a little bit better than a basket of Trump stocks, but I don't think it's material. And so we'll see. I think at some point the stock market does need to come to grips with the changes that are very likely to happen in the tax code.
So does that happen closer to the election, or I mean, what does it track? Does it track
yeah, I mean, I think it does. I think the lead up to the election, I think this next month is going to be a struggling month for the stock market with a lot of volatility. I think the economic data is more volatile than ever. I think Wall Street estimates are guesstimates now more than ever before because of the unknowns. We had a stock market that had its fastest 35% decline in history, followed by the deepest, shortest recession on record, then the biggest 100-day gain in the stock market, which was 45%, followed by the biggest 6-month advance, which was 60%. So the volatility is there, and the economic situation is such that I don't think we can just dial in an extrapolation of today's good news on the economy for the balance of this year into next year. I think that peak growth was in August. I think we're slowing now for the economy, and I think it's just a matter of how much do we slow. And it's going to take a long time to get that unemployment rate back down below 4%.
Howard, that's right where I want to go with our next section with you. So let me tease out forward on that. Can you acquire shares of Apple Computer after this pullback and before the new product announcements?
So, Apple, of course, was part of the stock split mania in August, which also included Tesla. And that, of course, is absurd because, Tom, as you know, and as many of your viewers know, a stock split does nothing for the fundamentals of the company or its stock. You're simply more shares outstanding. Your ownership stake hasn't changed. And yet it really triggered the kind of 1999 run-up that we hadn't seen since then because of simply announcing a stock split. Apple had to give back those silly gains in August, and it did, as did the overall market. And so that is a good start. I think that while it's still a little pricey at about 30 times forward earnings, I think you can buy it here because the new 5G phone that's due to hit the market next month is going to be a blockbuster with perhaps 1/3 of all iPhone owners upgrading next year. So we think that this is a good time now. You can buy Apple here after the pullback that it's had off of that August crazy.
We're going to advance this dialogue with our next section with Mr. Ward. Thrilled he's with us today. And yes, we'll touch on those technology stocks and Apple Computer. Mr. Ward with Gabelli as well. Coming up, of course, the debate tonight. It is such a busy calendar. Jobs Day on Friday. Jason Furman in the 1 o'clock hour at the Kennedy School. Jason Furman teaching economics at Harvard. He's all Ec 10. Futures flat. The terminal, it's boring. The dollar, weaker. This is Bloomberg. Stay with us.
CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
This is Bloomberg Surveillance. I'm Rishika Gupta with your Bloomberg Business Flash. Uber is considering whether to buy a ride-hailing joint venture between BMW and Daimler. That could give Uber a boost in market share in Europe and Latin America. Bloomberg's learned that there have been early-stage talks. The challenging market could make it difficult to agree on a price. And LVMH has countersued Tiffany weeks after pulling out of its planned $16 billion purchase of the jeweler. The luxury goods maker says its decision was driven by the French government's request to delay the deal's closing. LVMH also accused Tiffany of mismanagement during the pandemic. In January, a trial is set in Delaware to determine whether LVMH must go through with the deal. And that's the latest Bloomberg Business Flash. Tom Francine.
Rudika, thank you so much. Now, there's not much going on in the markets. A couple of market participants told us, of course, are focusing on this extra stimulus that could be coming from the U.S. It could be underwhelming in terms of the amount, and at the same time, they're just looking at the number of, increases in cases around the world. I'm also looking at overall European stocks. They're pretty range-bound, but they're dropping. I'm looking at banks and cyclical stocks down, Tom.
Very good, Francine. This is just moments ago. Turkish lira is dropping like a rock. It is a stronger Turkish lira in aggressively from 7.85. I do not have any news flow on that, if that's direct intervention, I should say, from a central bank or from the government, but that is of note. Please stay with us. In the 8:30 moment, Bob Woodward will join us on Rage. This is Bloomberg.